Hát szeretnék mindenkinek jó reggelt kívánni. Szerintem 1-2 percen belül fogjuk kezdeni akkor a mai napot. Csak még megvárjuk, hogy hátul még le tudjanak ülni az emberek. Hát jó ennyi embert látni. Jó reggelt mindenkinek. Remélem, hogy jó nap is lesz ugye a mai napból. Én angolul fogom majd megnyitni a rendezvényt ezek után, mert vannak más országok is, ahol nézik ugye élőbe, és nekik sajnos nincsen fordítójuk, de szerintem mindenki másnak van fordítója, és szerintem működik minden rendesen, úgyhogy nem lesz ezzel probléma, jó? Úgyhogy... Mehetek? Okay, so good morning, everybody. I would like to welcome everybody here who participates and everybody else who's watching the live broadcast of this fantastic event today. Basically, we have participants from all over the world on the live broadcast, and today, probably you know, Birger Schäfermeier will hold some presentations, and the name of the day will be the Backstage trading. But before we jump to this 5 steps of the winning mindset, let me share some insights with you. Why are we actually holding this conference? But first of all, probably most of you know that trading Forex is not easy. Probably most of you guys have suffered some losses during trading. You probably spend a lot of time to find out what is the best educational material for you. And recently there is a big buzz going on the internet, and you can find a lot of educational material all over the world. Maybe some of you have also tried to find a mentor who can help you to gain the right experience to be able to trade profitably. But there is only a few who can really help. And basically, if you are tired of those shiny materials, shiny marketings, and all those empty promises, what you actually heard, then let me tell you that Admiral Markets education is going to be for you, and probably this conference is going to be for you. You know, we are actually holding some seminars in the last couple of years, and you know, it's probably, you know, it's luck, but the winner of the competition, what we had a few months ago, is actually participated in one of our seminars. Kata is not here, but I will introduce Kata at the end of the seminar. She's the one who's holding these seminars, and she has like 10 years of Forex trading experience. So, basically, most of the people who gets in the situation where most of you guys are as of now, you know, they actually try to find a fast education. They try to trade on demo accounts for a few weeks, and right after they jump into and start trading on a real account. And probably we all know that what's going to happen if somebody chooses this way. So the problem is with that most of the people who are actually holding educations, and not in Hungary, not only in Hungary, but like in worldwide, what I see is that they don't have experience, or they're just like marketing guys, or they have just a little experience. And I am sure that there is a reason why we received this year the best educator from the UK Forex Awards. And the reason is that we have people who are holding this education, that they are actually trading on live trading accounts, and they have at least a decade of experience. They survived a few crises, and they proved themselves that they can trade. And just like Birger, they have this love for trading and for mentoring people and holding educations. So basically, we have attended a lot of those educations, and we've been there. Myself and the people who are doing this education, we've been there. We have tried a lot of educations. We know what those people did wrong, so we know how to do it right. We know how hard situation you are as of now. Birger, as far as I know, has thousands of students so far, who actually either finished his mentoring courses or they attended some of his seminar and live trading events. He's holding trading camps where he actually he trade lively, and most of these events are you're making profits, if I'm not mistaken. This is what I heard. But it's he's not only a mentor, he's a trader. He used to put himself up to trading competitions in Paris, and he actually finished in top notches. It's not a secret that Admiral Markets wants to be the best educator worldwide. And these are our first steps to start inviting international traders. Basically, next year, we will kick off with another 2-day seminar with another trader. His name is Nenad Kerkez. We already had a seminar with him, if I'm not mistaken. Is anybody were here a few months? Yeah. It was pretty cool. He's also a trader, so we will talk about that at the end of the day. We are doing this Zero to Hero program. This is for beginners, and I don't have to say it again, but people who actually trading are created these 20 days long lessons, and you can learn a lot from Zero to Hero. Or there are people actually here. Let me ask us. How many people here are trading lively? They had live trading accounts anywhere? Yeah, so for example, you guys can try out our Supreme Edition, which is on our website also. We have like many features, as you can see in the roll-up. So let me just introduce then Birger. I don't know if there's anybody in this room who doesn't know him yet. When I started trading for myself, it was 7-8 years ago. I started, digging into the materials, what I can learn, and his book was one of the few that I ever read. Well, not in my whole life, but for trading, basically, and it helped a lot for me. And I started attending to his courses and his seminars, and the way how he can actually explain things and put it in so simple, it's very rare. How they say that if you know how to do it, then you can actually explain it in a simple way. And after I read his book and his seminars and actually we start talking, actually my trading was getting better and better. So even after I had a couple of years of trading experience, he could help me to increase profit and decrease the losses. So basically, he will talk about some trading psychology. He will actually show some strategies in the second half of the seminar. But we all know that just a simple strategy or strategies are not enough to actually make constant profit. And I wish you a pleasant day. And Birger, we start with the myth of trading. And we will talk again at the end of the day when we're gonna, Birger's gonna give the three winners the checks. And we're gonna have some very, very nice promotions for everybody. And he has also some nice promotions for you. So, I mean, welcome Birger, and I wish you a pleasant day. Thank you.
Thank you very much. Yeah, Eurogeld, good morning, welcome to Backstage Trading. I'm Birger Schäfermeier, and I'm really committed to day trading with my heart and soul. Since 1990, and that's more than 26 years now, I wake up in the morning eager to see what the markets are doing. So the first thing, before I turn left to my wife, I pull out my cell phone, checking the markets. But she understands that, because she knows me for 24 years. So when she learned me, she knows already this guy is a trader and his love is trading as well. So I really like this because every day there's something new. You have to react to all the things in life and that happens. So next week, big election in the United States. This year already the Brexit. So many things which have such an impact on the market. And for me, it's so interesting. What will be the impact? And maybe how can I make a profit on that if I make the right decisions? So that's really a business what I really love and like. And so, I'm committed to this business. And most of the time I'm trading futures, DAX, stocks, currencies, sometimes some commodities. But I specialized on a few markets because I think if you're a specialist in something, you're better than the rest. And so I don't trade this morning US dollar, Australia dollar, and next day Japanese yen, and next day some gold, and then some oil, because, if you want to do a thing really good and perfect, then you should specialize, okay? And that's the reason why I did that. Sure, when I started trading, I trade all the things which moved, So lean hogs, wheat, corn, commodities, whatever. I don't have the knowledge to trade that, but I tried that, and it cost lots of money. And then I decided, okay, you have to specialize, and after I start specializing, I still not earn directly money, but after some years, I was a specialist for DAX, specialist for Euro, US dollar, specialist for the Euro bond, and now I'm very, very good in these markets. To be honest, I made my fortune with trading. But more important is that really trading is my passion. And for me, it's an honor today that Admiral Markets invited me to talk about trading. And I like to share today some of my trading ideas, some of my trading philosophy with you, and some of my knowledge. And maybe you're wondering why a professional trader shares his idea with others. Should I be concerned that I share with you? I will tell you a story. When I started this business, I was looking for the Holy Grail. I spent years and years looking for the best indicator, for the system which makes money automatically. I spent so much time because I want an easy job. So I want to stand up in the morning, start my computer, and my computer should print the money for me. That's what I'm thinking is trading, and that's the Holy Grail. After thousands of, not thousands, but hundreds of books, I read more than Salan. He only read 3. But I think I read most of the trading books at that time which are available. And after reading the books, seminars at that time, they were not popular in Germany and in Europe, but in the States maybe, but it was very expensive to travel to the States, so really I'm reading books, trying system, and it was a long, long odyssey. And finally, I realized that the key was not something what is out of reach. Was not something outside from me. The key for success lies in me. Yeah? I doesn't deny that you need the right tools to become a successful trader. Yeah? And that's the part I want to share today with you. The right strategies. So I will teach you today some strategies. Yeah? The right approach, the right trading process. That's all important, but without the right mental attitude, all this is worthless. Yeah? So first of all, you have to find the right mental attitude, the attitude of a winner. Yeah? And this is different from what the average guy is thinking about trading. And that's why I want to start today with the first step of my presentation when I like to talk about trading myth. Yeah? So these are some common misbeliefs about trading, because these misbeliefs are not the right attitude and not the right beliefs, and it directs you in the wrong direction. Okay? So success comes from an inner source, and it has a special DNA, and it requires a lot from you. But if you are willing to pay this price, and what this price will be, I will explain you during these presentations, the reward will be huge. Today, I'm managing several million euros, yeah, day by day. Yeah? And I still could sleep very well at night because I know what I'm doing, and it's not a problem for me to take some risk, but the way to get to this point, yeah, this cost me lots of nights of sleep, and the way was stressful, but now the reward is huge. Yeah? And maybe the question why I'm sharing my knowledge is, I love the trading, but I don't only love trading, I love to talk about this, and I have thousands of students. And every time when, after years, a student comes back to me and says, Birger, thank you very much, I made it, I'm so proud that I could help him to become a better trader. And this feeling, yeah, this feeling is more than money. Maybe you can understand this, maybe you're not can understand this. If you only think in money, then you will never understand why I'm doing this business, because it's not money what drives me to this business. Yeah? It's passion, why I love this business and why I'm doing this. And that's why I really like to share some main ideas with you. And I named today this presentation Backstage Trading because today we want to look behind the curtain. So what does a professional trader really? Yeah? Lots of people thinking I'm sitting day by day in my office, punching trades in my computer, in, out, totally stressed like a jet pilot, yeah, in an attack modus, yeah? Hey, sorry, I'm now 47 years old. I couldn't do this job by that way, yeah? I would get a heart attack or whatever, yeah? No, I have really a relaxed job, and to know what you do means you need the right process. And that's what I want to teach you today. What is the right process, the right trading process, which makes trading easy. Yeah? I will show you how a professional trader thinks, and yeah, what are some misconceptions about trading and what is the truth about trading. But before we start, here's the warning, the obligatory warning. Yeah, this presentation is, you could read this. I don't want to tell all this stuff what is here, but keep in mind, yeah, that's, you already saw that, is, yeah, the warning, and now we could start. So what we want to do is, step 1 today, 7 myths of trading. I want to tell you some common misbeliefs about trading. After the lunch break, I will talk about the trading process and the strategy part. Today, I want to share some strategies with you, which are which are designed for correction markets, for consolidations. Usually I'm a trend follower. But this year, maybe if you are a trader and you already traded, maybe you realized that S&P, for example, was just moving this way. Yeah? And when you're a professional trader, yeah, okay, you can say, okay, I wait until the market starts to move again. But maybe you have to pay your rent at the end of the month or year. Yeah? So maybe you should have some strategies in your toolbox which are able to deal with such markets. Yeah? Or maybe you trade the US dollar. Yeah? 2014 was a great year. Yeah? And in 2014, I made so much money with the US dollar. But then, 2015, 2016, this market was just moving this way in a very narrow span between 108 up to 1012, 1015 maybe, yeah, and with some spikes. So I think it's a good idea also to share not only trend following strategies with you, because 65% of the time the market is in a consolidation. It's just moving sideways. Only 35%. The market is moving in trends. Most of my money comes from trend trading. That's the truth, but it's still good to have some strategies which are designed for consolidation, so for consolidation patterns. So today, some strategies for consolidation patterns. After the coffee break, I want to give you some mentor tips how to improve your trading sustainability and some important thoughts about my philosophy based on my personal experience. Yeah? So I will tell you some personal experience and what I learned about this personal experience. So that's the agenda for today. That's what I plan to do with you. And yeah, so maybe we start with trading myth. So what is a myth or a legend? A myth or legend is a widespread misunderstanding with a small portion of truthfulness. And that's a big problem. So people could accept and believe this legend because they know there's a small portion true. But the big problem is most of this legend is not true. And it's a misbelief. And if you believe something which is wrong, you will go in the wrong direction, because all the things what you do, all the steps you take comes from what you believe. Yeah? So the belief drives what you do, what you reach, what you can achieve. And so it's important that you have the right beliefs about trading. And so there are many common legends or myths about trading, and some which maybe pulls you in the wrong direction and put maybe some pressure on you, or brings you to a point where you make bad decisions. This myth I want to discuss with you today. And number one is really some myth. It's supported by the financial industry, and it says you can make easy money with trading. Yeah. You know, maybe, I don't know how it's here in Hungary, the advertisers from brokerage firms or for whatever, yeah? So in Germany, there are some TV spots, somebody pulls out his cell phone, looks at it, wow, 500 euros again, yeah? And puts the cell phone back. So it looks so easy, to make money, yeah? And that's a big problem if you believe this. Because if you think that something is easy, but it isn't easy, then you will make errors. Yeah? Maybe it will put you in big danger and big trouble. So you start your trading and think, this is easy. You start with your money, your assets, and you lose all your assets just because you think it's easy. So think, for example, somebody who never swim. Yeah? And now somebody says, oh, it's totally easy. Look, all these guys over there, they're just in the water and they swim. It looks so easy. So jump in the water. But he never learned to swim. So he brings him in a big danger because this guy jumps into the water, don't know what to do, will sink and die. And that's the same thing in the trading business happen because people think it looks easy. Yeah? But trading maybe looks easy, but it is a business. And it could be easy when you know what to do. Today, early in the morning, I want to drink a cup of tea here, okay? And I pulled this out, yeah, to get this green tea. And to be honest, usually I'm drinking coffee. But today, I want to prepare for my presentation, and I know I'm a really coffee junkie. Yeah? And if I drink too much coffee, my blood sugar goes down, and maybe the presentation will be not good. So I decided just for 2 cups of coffee, 1 cup of tea. That was my decision. So, but I don't know how to use this, yeah? So how to open this. So I tried this way, yeah? And I'm standing there in a discussion, and I tried to open this way, yeah? And really, I try hard, yeah? And it's not opening. It's really, I try my best, yeah? It's not working. And then I discovered this. It was so easy, yeah? Things could be easy if you know how to do. And that's in the trading the same. But if you don't know how to do, how to open, yeah? How to do the trading, how to open your trade, how to manage your trade, how to enter your position, how to manage your risk, how to behave during the day, how to deal with drawdowns. If you don't know all these things, trading is a hard job and it's not easy. Yeah? And like any other business, you have to learn the trading. Yeah? You have to learn it step by step. And the process of learning is not easy. But after you learn it, then it's very, very easy, but you need to learn it. Maybe you remember your first driving lesson, yeah? Yeah. So for me, I was so excited sitting in this car. I really don't know what to do, yeah? When to push the brakes, yeah? And all these pedals, yeah? I really don't know what to do, and it was really hard, the first driving lesson. Now, 25 years later, yeah? I'm driving, yeah, using my telephone. It's not allowed, but maybe you do this, yeah? But you do this, and it looks very easy if you do this. And it needs training it needs training that the trading is easy. That's if you make your homework, and if you have enough experience, then maybe it's like a piano player in a bar. Yeah? You see him playing four-handed, talking or flirting with a girl, and he's still playing a nice song, and it looks so easy. When I'm doing my trading, sometimes, yeah, it looks also easy. So I remember last year there was a big exhibition in Frankfurt, and there was a live trading on stage. I was on stage, and I'm trading there my account, and I'm trading DAX. And it was a 10-lot position. So DAX future, one lot, 1 point is 25. So each point is 250 euros. So my profit and loss statement on the platform was moving in steps of thousands, yeah, in increments of thousands. So as you see, going up, going down, and I was sitting there very relaxed and doing my live trading. And then somebody during the show raised his arms and said, "Oh, this guy is not trading live with real money." I said, "Why? Why should I not trade with real money?" No, he's sitting there so relaxed, yeah, and there's no stress and something, but thousands going up, thousands going down, and he's still sitting there doing nothing, yeah, because I'm used to that, yeah, like driving a car, yeah, like playing for 20 years piano. But the first trade, I remember, I was so excited. My first trade, when I did that, I have to order with telephone, because computers at the beginning of the 90s, they was not common that you use a computer. And I could remember that really when I pull up the telephone, I really could not hold it in my hand because, yeah, yeah, I was so excited, yeah, and then I have to order in English, yeah, my first position. Really, my heart makes boom, boom, yeah, and I could not remember it was a profit or a loss, really, because the first real future trade, yeah, it was very, very exciting. Yeah. But today, I'm very relaxed when I do my trading. So, problems with computer? Okay. Trading is a business, and you should treat this like a business. And the big problem why people think trading is easy is because the market entry in the trading business is so easy. You can open an account within 5 minutes, which is fine because it's not much paperwork, but to become a trader, it will take more than 5 minutes, believe me. Yeah? It will maybe take 2 or 3 years. There's no job, no business where you are a professional within 1 year, or with half a year, or with one seminar, or with one book. Yeah? You are a professional in whatever, yeah? And you know, you went to school, you went maybe to university, you're trained in your job, and this takes some time, and it's the same in the trading business. And the big problem in the trading is that there's no market entry barrier. And so, if you're a beginner and start your trading, you already compete to the best, yeah? Because trading is a competition, and it's a zero-sum game. So what somebody is winning, some other loses. That's fine because we are all adults and we know what we are doing, yeah? And we think that we want to be the winner. But if you take part of this game, you have to know there's only one winner and there's a loser. And if you don't want to be the loser, you have to make sure when you start this business, what is your advantage against all these professionals? What is your advantage against somebody who is already trading for 25 years? So if you're not trained, if you're not really good trained in this business, it will be almost impossible to become successful in the trading because it's very different to other things in life. For example, yesterday I watched the Champions League, yeah, and I'm a big supporter of Dortmund, yeah, and finally they made it, yeah. So they won yesterday, and so I'm glad. And you know something? When I was a child, I played football, and I'm still playing football today. Okay, not on Champions League level, but I'm still doing that. But I could not play, even if I want, and even if I pay somebody, Champions League. It's impossible, yeah? Even if I go to Dortmund or Barcelona or to whom, and say, okay, here, 1 million, please, one game. I only want to be one game in, yeah? It's impossible because, yeah, there are several qualifications level until you come to the Champions League level. In the trading, you start directly in the Champions League. That's the top level. There is no rookie round, no beginner round, no, okay, some experience round, but yeah. So you're directly playing Champions League. And you have to understand that. So for those who are already doing this 25 years, it's easy. For those who want to participate and to compete against them and who are beginners, it's a very tough job. It's not impossible because I start myself in the trading business, and it takes some time, it takes lots of training, and I need to have the right knowledge, the right beliefs and so on to come to that point. So it's not impossible to become one of the best traders and to compete with other good traders. But don't be a fool and think, okay, I open my account in 5 minutes and tomorrow I could make a living by trading. That's not the truth. So, no qualification round, no market entry barriers, and no space for errors. That's the next big problem in the trading. In lots of business, you can make some errors and you're still in the business. Yeah? In trading, one error could wipe you out. If you took too much risk, you're out of this game. And so that makes this business a little bit more difficult than other business. And for me, if you want to become a good trader, you have to learn one thing. You don't just need a strategy, it's much more. What you have to learn is a process. And if you train this 5-step process, and I will show you in detail this process today, you could avoid lots of errors. And I designed this process at first for myself, then for my traders in my asset management company. I'm running an asset management company. I have their trainees, I have their students, and I have their asset managers, and how they should manage the money. And after that, I teach this process also to my students. So, and it's a 5-step process, and every single step is ultra important. So, if you just miss one of these steps, I guarantee you, you will not have success on the long run. Maybe you make a lucky trade, but on the long run, you will not make money. The step starts in the morning to analyze the market. Then you have to choose the right strategy. And the strategy is not always the same. I will come later to this point. After that, you have to plan your trade. You have to plan your entry. You have to plan your risk. You have to plan how to manage your trade. You have to plan your exit. And after you do all this planning, you have to manage this trade. If you do a good plan, the management is easy, because management is just executing your plan. Most of the people don't plan their trade, and then they get lost when they try to manage their trade. They're in, market moving up or down, they make profit or loss, and they don't really know what to do. And they try to figure out during the trade what they should do. Oh, should I sell? Oh, that's a red bar. Maybe I should sell. Oh, no, the next bar is green. Yeah, stay in. But what if the market takes back away my profit, and so on? Yeah, you're totally confused in your mind if you don't have a good plan. If you have a good plan, the management is more or less a question of the mental state. If you are relaxed, if you are cool, if you are straight, you could manage your trades easy. And at the end of the process, each day, and after each trade, I do a checkup. Because what I want to do is improve myself day by day, year by year. Because the markets maybe will change. And if the markets change, I want to change with them. And so I'd have to do a checkup. Did I stick to my process? Was everything right? Could I improve something? And without that checkup, I'm not flexible enough, or you are too flexible. Those are both problems in trading. Yeah? If you're too flexible, you're switching from that to that to that. It makes no sense. You could not repeat your success. If you're not flexible enough, you try the same thing, which maybe is not working anymore, and you realize that after you lost all your money when it's too late. So you have to be flexible, but not too flexible. The checkup process will help you to then identify how flexible you are. So you need some time to experience and learn all the steps. I have lots of checklists for analyzing, for choosing the strategies, for planning, for management and check up the trades. I will show some of these checklists today, but this is the core process of trading, which I'm using. And it's not just going in and out, it's a process. And I will show you how this process could be. Yeah? I have several processes, but the core process is always the same. This one is for easy market conditions. So there are some processes for maybe complex market conditions, or for some news market conditions which are more dynamic. So, but for the easy market conditions, for trending markets, what I'm doing is in the morning, I'm doing analyze. And I just try to figure out what is the advantage. This word advantage, I will explain during my presentation. But I want to show you what I'm doing. I'm using a tool. That's my software. I developed this software for myself, for my company, and now also as well for my students. And with software, for example, we go to the Bund, yeah, whatever. So you have whatever commodities or whatever market you want. I have several trends on different time frames. For example, daily down, 60 minutes down, and maybe 15 minutes is up. So, and I want to figure out, so what is the advantage? In this case, the advantage is short. And we have several conditions. So how big is the advantage? What is my equity doing? And how aggressive I want to trade. Yeah. And depending from this analyze, some strategies are green, some are red. So red means these strategies are not good for that conditions. So I have to check the advantage, I have to check market conditions, support resistance. I'm using some tools. I will show you some of the tools for which I'm using for analyze. And then in the next step, I'm choosing the right strategy. It makes no sense to use the same strategy for different conditions. Hey, you wear different clothes in summer, in winter, in autumn. These are different conditions. Why using the same strategy? Yeah, you're not using this. You're not wearing the same clothes on different weather conditions. So why you should use the same strategies on the same market on different market conditions? This makes no sense. But what I saw was a lot of beginners and traders say, okay, give me one strategy. Please give me one strategy. Maybe I don't have the money to buy the strategy from you, but give me one. So I said, okay, if I give you one of my strategy, do you think it will help? They think, yeah, because then I make money. No, because they don't know which strategy they should use under what circumstances, under what conditions. And for a trader, it's very important to choose the right strategy for the right conditions. So there is no strategy which works under all market conditions. If somebody is claiming that or advertising this strategy is good for all market conditions and you will make all the way money, this is maybe a back-tested, curve-fitting strategy, but never traded with real money, believe me. Yeah? Strategies are made for different market conditions. So after analyzing the market, I have to choose the right strategy. And if I have the right strategy, I have to plan my trades. Depending on the strategy, I have different plans. Entry plan, position size plan, trade management plan. So, for example, I'm going to plan my risk manager, yeah, and I decide, okay, for example, yeah, I want to sell something, the bond, I put a stop, for example, a target in, and I decide for different accounts. We have whatever accounts here. Yeah, you can decide if you want to trade defensive, neutral, aggressive. Yeah, and you could put in market condition, and depends from the market condition how much risk you take, and then maybe you get the result how much contracts you sell or not sell. Yeah, so I'm using a position size plan, a trade management plan, and then I manage this trade. And at the end of the day, I keep my journal. So trading, this is part of the checkup routine, trading journal, where I can enter all my trades and then check how good or not good this strategy is doing. I'm checking my trading plan, I'm checking the business plan, normal stuff you do if you have a professional business. So if you learn this process, and if you learn all the single step of this process, I'm pretty sure that you could repeat your success and that you also could repeat my success, because I trained this process first with myself, because the first student I had was myself. Yeah. Later on with my employees, and later with my students, and lots of them are successful today. What is your job? So you should, first of all, for all the things which happened, take 100% responsibility, no excuses. It's you who act, and not your broker or whatever. Then you have to train and learn every single step of the process, and you have, that's very important, to gain experience. It's like in any other job. After the training period comes a period where you gain experience. Yeah? And after that, maybe or I'm pretty sure, after that, trading is easy. That's the true portion of this legend. But if you start, the way to become a successful trader is maybe not easy. But that's what I told you in the beginning. If you want success, you have to decide if you are willing to pay the price for success. Yeah? Success not comes along without any price. So it's your decision, are you willing to pay the price for the success? And then you could undertake the steps which are necessary to get the success. Second myth of trading is, and this is a very common one, lots of people think they just have to know what direction the market will move. And they think, okay, if I know that the market will go up or that it will go down, I will make automatically money. Sure, it's more easier if you know where the market is going, if it's going up or down to make money, but I will show you in the next chapter that you don't have to know what the direction of the market, which direction the market is going. Yeah? Sure, I need to point out that the future includes so much random that all forecasts need to be taken with a pinches of salt. So never make predictions, especially about the future. But on the other side, over the next 5 years, I'm going to wager that February will be the coldest month on average. Yeah? And July, the sun will be, the sun will be shining most, and the sun will be maybe rising in east, yeah, and Kim Kardashian will be never elected for Pope, yeah. So there's something you can predict, but maybe not for sure, yeah. So maybe for 1 year nobody could even imagine, or for 2 years, that Donald Trump maybe will be president, but maybe we will see next week something, or Brexit, nobody expected the Brexit. Even the bookies, yeah? The day before the Brexit happens, I checked the bookies, the quotes of the bookies, and usually they know exactly what will happen because that's the best opinion if somebody bets something on something, yeah? Like the markets. And all the English bookies, they showed quotes that it's not, that the odds for a Brexit are very small. And you know, now we have this Brexit. So, what I'm saying is, you maybe cannot predict the future exactly, but if you keep some sorts of statistics, yeah, then maybe it helps you to find out what's going on, and that's the way a trader works. So the trader is not really predicting, but he uses some statistics. I want to show you something. Look at this girl. So, what do you think? Please raise your arm. Who is thinking this girl is turning right? So, okay. Now, raise your arm. Who is thinking this girl is turning left? So, half-half. So, who is right? Yeah? We see all the same picture, the same movie. But some people say, okay, this girl is turning right, some it's turning left. And if you're looking a little bit longer, some say, oh, now it changed the direction. How could this happen? This is almost the same with a chart. Yeah? One trader is looking on the chart and so this chart says that the market is going up. The other trader is looking at the same chart and say, no, the market says it wants to go down. Same chart pattern or whatever. So here, it depends if this girl is turning right or turning left. It depends which part of your brain is more active. Yeah? So if the left part of the brain is more active, it turns right and otherwise. So that's why the girl also could switch, because usually we have two parts of brain. I hope in Hungary is the same like in Germany. Yeah? So, but the thing I want to show you is sometimes it's very subjective if you look at things. And if you are very subjective in the trading business, it's very hard to repeat your success. Yeah? Because if you are subjective, it depends maybe from your mood, which part of your brain is more active. It could happen from so many things. And so, nobody's able to predict the market. That's what Peter Lynch is saying, and that's what I'm saying. But what I'm saying as well is, if you have some statistics, objective statistics about the market, maybe you could not predict the market, but you have some odds. And that's all what we need as a trader. We don't need the direction, but we need odds. Yeah? So like the odds that February is the coldest month, yeah? Maybe it's not the coldest month, but maybe January or March, but the odds are very high that it's February, yeah? And not June. Yeah? And why we know this? We know this from experience or from statistics. And that's what a good trader has. A good trader has lots of statistics, and you should keep some statistics, and you should have some statistics. And when you want to make money without predicting, the only way you could do this is if you know what is the advantage in the market. And to figure out what is the advantage is a question of statistics. Yeah? And I want to explain this concept of advantage a little bit deeper because it's crucial to understand the trading business. So, for example, in the trading, you should always trade with the advantage. It's like in the swimming. So if you're swimming against the current, yeah, this will lead you sooner or later to exhaustion. Yeah? And in the trading, if you swim against the advantage or trade against the advantage, you will maybe experience painful drawdowns, and in extreme cases, maybe you will lose your whole account. Yeah? Naturally, in order to swim with the current, you have to know which way the current is flowing. And determining the trend, the current trend of the market, is a key success for investment success. So the advantage is very similar to the current in the swimming. And to understand this, I want to show you some examples. So the next thing what we want to do is understanding the advantage. And there are some easy ways to understand this. One is if you toss a coin. So if you toss a coin, what are the odds for heads or tails? Any ideas? 50-50. So if we play this game, and when we were young childs, we played this all day long, yeah, tossing a coin. Yeah? If we play this game, after a long period of time, will there be a winner or not? It's the same, it's equal. There will be not a winner. After a short period of time, maybe just for a break between some school lessons and we toss a coin, will there be a winner, yes or not? Yes, because if you do it just once or twice, there will be a winner. Maybe this could happen. But statistics says, because you know 50-50, on the long term, there's no advantage if you toss a coin. So, in the trading, we use a concept which is called expectancy. It comes from the statistics. And here, if we have the head and the tail and we toss the coin, it's like the entry is in the middle, target on the left side, and stop on the right side, or maybe on the other, it doesn't matter. But target and stop is both 1-to-1. The risk-reward is 1-to-1. And without any advantage, you could not make money. The expectancy is 0. 50% that the market is moving direction of tail, 50% that the market is moving in the direction of head, or moving to the target and stop. So 50% you earn €1, on the other 50 times you lose €1 after 100 trades or 100 coin tosses. The expectancy, that what you could expect, is 0. And so, if you now calculate commissions in this game, you will not make any money. So, if you have a market without an advantage, you will lose money, even if you have a broker which very low commission, like Admiral markets, which really have in DAX, I think the lowest commission I ever saw, 0.8 is really low commission. So, but what you need is an advantage to make money. So, how can we get this advantage? What happens if we own twice what we risk? So, for example, we play this coin toss game, and you get €2 if you're right with head, and if you have this tail, I only get €1. I think that you like this game then. Yeah? I'm not sure if I want to really to play this with you, but at the end of the day, for sure, you will make money, I will lose money, because you're earning twice than me, with a 50-50%. So that's one possibility, that you earn more than you lose. But in the trading business, if you want to earn more, so your target is further away than your stop, in such a situation, what do you think, what is more likely, to be stopped out or that the market reaches the target? Stopped out, we are closer to the target. And in the moment we are closer to the target, then the likelihood that we are stopped out increases. And you know, many blogs and books says, okay, you should trade good risk-reward ratios, which is absolutely right. But you have to understand, if you have a risk-reward from 3-to-1, 4-to-1, maybe 5-to-1, the likelihood that the market reaches your target getting smaller, the bigger the risk-reward ratio is. So, for example, in day trading, most of my trades are risk-reward 1-to-1, maybe 1.5-to-1, but usually it's not that the reward is 5 times of my risk. So, if it's more likely that we are stopped out, that's not the solution to get an advantage in the trading. Maybe in the coin toss, yes, but not in the trading. So in the trading business, if we have such a situation like this, without any advantage, the odds to be stopped out are 66%, reaching the target is just 33%, and at the end, the expectancy is again 0. So, I know that this statistics and math is not for everybody, and some people maybe think, oh, that's boring. I understand that because it's not so attracting like a chart moving up and down. But we're talking here about the core principle of trading, and you have to understand this. That's very important. I promise you there will be no more math in my presentation, but this point here is crucial, and you have to understand, without advantage, you could not repeat success. Yeah? So, the expectancy is again 0. So, the only way how you can make money with trading is that you get an advantage. And here are some real-life examples where advantage comes in place in a random environment and it's not trading. For example, the casino. In the casino, in roulette, you have a random environment. So you never know if it's black, if it's green, if it's red, the color. You never know which number the ball drops. So, but the casino is making money day by day. Why? Because it has a mathematical advantage. There are 18 possibilities that the marble falls into the black hole, 18 in the red, and just 1 on the zero, the green. And that's the profit for the casino. So the advantage for the casino is not big, but there is one. And this advantage is 1/37, 2.7%. This sounds not much, but that's very similar to trading. So this means on 100 euros, the casino just make 2.70 € profit. So if you're gambling and your stake is 100 euro, you put your stake on red, green, or whatever, the advantage for the casino is just 2.7 €. But now it comes in place that you repeat this game and you repeat this game, that you have different tables in the casino, maybe you have different casinos. So, and that's the big thing in the trading, that you only need a small advantage, but you can scale this advantage. Yeah? So if you have an advantage for 1 lot, you will have the same advantage for 10 lots, for 100 lots, or even for 1,000 lots. And that's why I like this business. So if you could do it well with 1 lot, so if you start now, if you train now, and if you start with 1 single lot, and you're successful, you could scale your success to 10 lots, to 100 lots, maybe to 1,000 lots. And maybe in 5 or 10 years, you're standing here teaching others how to scale your success. Yeah? That's possible in the trading, and you don't need a big advantage. And the big misconception in trading is that people think that the advantage in trading is very big. So, for example, that we know for sure, for 80% confidence level, that the market will go up. If we really know it for 80% that the market will going up, this advantage would be so obvious that everybody wants to go long, yeah? Because it's too obvious. If the advantage is too obvious, everybody would do the same. And could you imagine what will happen if everybody is doing the same in the trading business? Huh? Okay, first of all, the price is going up, but later on, when everybody's doing the same, there will be no advantage anymore, yeah? So because, yeah, you have to be the first. And so if something is too obvious, it will not work in the trading. So be careful if somebody shows you this pattern is a 90% hit rate pattern or whatever. If something is too obvious, it will not work anymore. Maybe for a short time period, but not for a long time period. So when I do my statistics and I figured out lots of advantages, situations in the trading, but the advantage is more or less 52, 53, maybe 55%. So I know when I'm starting my day, and I'm thinking the market is going up, I think, okay, it's going up 55% of all days, the other 45 not. And that's a big problem for lots of traders because it means that if you do a thing 100 times, 45 times you are not right, and just 55 times you're right. And our human nature don't like this. Our ego don't like this, yeah, if you're not right. And yesterday, I was asked by a guy, a Romanian guy, and he told me, okay, we are running a brokerage company, and why are most of the German clients losing money? Because he asked me because I'm a German, yeah? Okay, I don't hope that too much Germans hear now what I'm saying, but it's the truth. The Germans like to be right, yeah? They say, okay, what I'm thinking is the truth. That's right, yeah? Yeah? They don't accept not to being right. And that's in the trading a big problem. If you think, I must be right, if you never question yourself, yeah? If you never question, oh, maybe I'm not right. And so that's the best way to lose lots of money in the trading. So, how to get an advantage in trading? The easiest way is to figure out trends, some recurring patterns, or market inefficiencies. But usually you do this just if you keep some good statistics. You have to understand that the market offers you an advantage and not the trader itself. The trader has to be good prepared, good trained, but the market offers you the advantage. So without advantage, you will not make any money in a market. You have to understand that. So the first job in the trading business is early in the morning to figure out where's the advantage. And that's what I'm trying to do here with my analyzing tool. And the easiest way to figure out the advantage is to check daily trends, 60 minutes trends, 15-minute trends, for example. And that's a very easy way because it's like what I told you, this example with the current. It's swimming with the current if you are trading with the trend. That's a very, very easy way to trade with the trend. And it makes sure that you trade with an advantage. But there are also some patterns, recurring patterns. For example, morning breakout. Most of the time in trendy market it works good, not if the market is moving sideways. And some other market inefficiencies which are tradable. But today we're talking more about the general things. You need an advantage in the trading. And you have to understand that the advantage is never constant. So, for example, if you have an advantage today, it doesn't mean that you have an advantage next month. So, and sometimes it could happen that my analyzer says there's no advantage, and this means there's no trading. So here you could see a snapshot of my trading diary. I'm running a live trading room where I do forex trading, and another trading room where I do future trading. And from morning to evening, you could see what I'm doing. And sure, I have good times and I have hard times. So for me, the summer was hard times, because market was not really moving, and I prefer to have some trends. But what you could see is it's not a single trade which makes my performance. It's more or less that maybe I have some bigger profits than losses, and maybe I have some more green dots, but not much more. So this leads to that performance here, and you see, in the summer there was a drawdown which I had. This happens and is part of the business. So I never know when I do my next trade if I'm right or wrong, because each professional trader, and me as well, could lose money. All these red dots are times when I lost money. And this happens day by day. But still, I'm able to make, on the long run, money because I'm trading with the advantage. So, please understand, trading means not guessing, oh, the market is going up today, or I guess the market should come down, or I guess this will happen or that will happen. It just means dealing with odds. So, it's like I'm running my own small casino. And I only want to invest if I have some advantage. So, for a good trader, the process is you have to understand the advantage. What does advantage mean? It means not for sure that the market is going up or down. It just means it's more likely. And this likelihood is not 80% or 90%, it's maybe 55, 60%. Then you have to understand, if you understand the advantage and you know that's not so big, you have to identify the advantage. And if you know what is the advantage, you have to capitalize the advantage. Those are the 3 steps. And capitalizing advantage means trading with the right strategy. So what I'm doing is here, I'm analyzing to figure out what is the advantage. Then I try to capitalize the advantage with the right strategy. And keep in mind, it does not make sense to use the same strategy for different conditions. So, the target or the goal of my analyzing each morning is that I just want to figure out what is the advantage. Sure, I'm looking for support and resistance as well, and then I'm deciding for an aggressive or conservative approach. But my goal is not really to know if the market is going up or down. I just want to figure out what is the advantage, and how big is the advantage, and what are the market conditions. And depending from the market conditions, I decided for an aggressive or a conservative approach. That's what I'm doing here. When I'm checking aggressiveness, how aggressive I want to trade. I'm not trading on the same aggressive level each several days. You know, if you want to win a race, or if you want to win a football game, yeah, like yesterday, Champions League, it makes not sense to drive in the race or to play in the football game with the same level of aggressiveness all the time. You have to switch. Yeah? Sometimes you have to be very aggressive, sometimes you have to be very defensive. So, yeah, and that's the same in the trading. A lot of times students come to me and show me their trading diary. And then I switch to their trading diary and see, okay, Monday, 5 trades. Tuesday, another 5 trades. Wednesday, 4 trades. Thursday, 5 trades. Friday, 5 days. So, 5 trades. So, on average, 5 days a trade. Each month, over the year. And then I question them, do you think the market is moving every day and gives you the opportunity for 5 trades, exact 5 trades all the day? Sure not. There are some good days, there are some worse days. Yeah, but why you're doing 5 trades each day? This means that you're playing with the same level of aggressiveness. Yeah? And this is a big error in the trading if you're not flexible enough to change aggressive trading and defensive trading. In the live trading room in summer, when the S&P was almost flat and this was really not moving, I did only 4 or 3 trades within 4 months. Yeah, and this was just a swing trading position. And to be honest, I lost lots of clients in the live trading room during the summer period because they expect from me that I do lots of trading. Hey, I booked the live trading room, I want to see how you trade. I said, no, you booked the live trading room because you want to see how a professional trader behaves. And a professional trader behaves in market conditions which are not moving with one strategy, and this is keep your fingers out. Yeah? That's my strategy for markets which are not moving. And it does not make sense. I will show you not the reality if I'm going in, out, and I could not make money in such a market. The best way is to stay out. And so the aggressiveness was very, very small. Now, the market starts, the autumn period starts, the volatility comes back, and now with the volatility back in the market, I raised my aggressiveness. And this means more trades, more strategies, and so on. Okay. So, okay. The next big myth about trading is that you just need a good strategy to make money. We already talked about this topic, but I want to make it more understandable because it's very, very important. Most of the beginners think, okay, just need a strategy and then I'm successful. Nothing could be more wrong. And I will give you a story or tell you a story, and that's why I choose that picture here. So imagine behind my house there is a huge hill, and I own this hill. It's my hill. And this hill is nothing else than a hidden gold mine. So in this hill is tons of gold in. But this gold is in the stones. Yeah? So I had to get it out. So what I do is, in the morning, I stand up, go into my garden, and dig a tunnel and start to dig a tunnel into this hill. And I get all the stones out. And then I smashed all the stones in the garden, yeah? Pulled some chemicals over the stones, and at the end of the process, I have some really nice gold nuggets. So each day, at the end of the day, I have some really nice gold nuggets in my hand. And my neighbor watched me doing that day by day. And he said, wow, Birger gets all the day gold nuggets out of his garden. So he comes over to me and asks me, okay, Birger, how are you doing that? And I told him, you see this hill? The only thing what I do is I'm digging a tunnel into this hill, getting out the stones, smashing the stones, pull some chemicals over this, and at the end of the day, voila, I have some gold nuggets. So easy is that? Yeah, so easy is that. Oh, fine, my neighbor says. I have a hill in my garden too. Look over there. It's a huge hill. It's even bigger than yours. Yeah? Look, this great, huge hill. And now I have Birger's strategy. So he's absolutely happy that he now have my strategy. Next day, he went to his bigger hill, digged a tunnel, was grabbing a tunnel into this hill, getting out all the stones, smashed the stones, pulled exactly the chemicals I told him over this, and nothing left. No gold, nothing. Yeah, disappointment. What went wrong? The difference is, I had a gold mine in my garden, because in this hill was gold, and that was the symbol for advantage, for a market with an advantage. He using the same strategy for a hill without gold inside. So it's not a gold mine. It's a normal, ordinary hill. Yeah? And that's the picture for a market without an advantage. So if you use the same strategy for a market without an advantage, you will not get out the gold nuggets. And that's why it's so important to understand that you will be not successful even if I will give you all my strategies now on a USB stick, and I say, you can use this. I promise you, you will be not successful until you're able to identify where's the advantage, and then to decide what strategy I need to capitalize this advantage. This is a very important step in the trading, and it's most overseen because lots of people think, I just need the strategy, and they're wondering if they could not make money with the strategies. Yeah? And then usually they said, okay, no, I don't trust this strategy anymore. Yeah? They switch from one strategy to the next strategy. But the only thing is they were using the wrong tool for the wrong conditions, because the strategy is just a tool. Yeah? It's a tool for special conditions. And depending from the conditions, you need the tool. For example, if you want to nail, if you want to, with a hammer, you want to nail something in the wall. Yeah, if you're using a saw, you get bloody fingers. Okay? So it's the wrong tool. And in the trading, it's the same. If you're using a trend-following strategy in markets which are not trending, you will get bloody fingers. And that's what a lot of people did in summer. They're using trend-following strategies for S&P, for example, for euro, US dollar, but that's not the right strategy. So if you want to become a good trader, you need a toolkit for different situations, for different market conditions. You need several tools, different tools. And today I want to show you some tools for market conditions where the market is just moving sideways in the consolidation pattern. So what in summer happened. On other seminars, I teach you maybe strategies for trend markets, but you should not mix. You have to understand each tool for a special environment, for special conditions. That's very crucial if you want to become a successful trader. Okay. Understand you cannot make on the long term money just with one strategy. Maybe you have the luck to start with a strategy which directly fits to special market conditions, and you make maybe at the beginning some money. But if you want to make a living by trading, and this on a long term, you need a toolkit a toolbox with more tools, with more strategies. Yeah? That's very, very important. And so we have these steps in the trading process. We identify the advantage, we check the conditions, and depending from the conditions, we're choosing the right strategy. And after that, we decide for the right tactic for the position size for it, or how aggressive or defensive our approach will be. Okay. So, and if you have different tools and different strategies, that's the next misconcept a lot of people have in the trading. You don't need a strategy which makes 80% or so. A lot of people put themselves under huge pressure because they think, okay, I'm looking for that strategy which makes 80% or 100% or 200%. For example, look at this. This is just an example, and I call this trader scorecard. This concept is a scorecard. You're using a scorecard usually in golf, and in the golf, the scorecard, you have your result, and you have the result, a professional place on that hole. It's called par, professional average result. And so you know what you should play on each hole. And in the trading, maybe the statistics tell you what should be your expectancy on each strategy, but in the reality, you're doing better or worse than your statistics. But what I want to explain you here is, with this scorecard, for example, if you have 10 strategies, breakout open, sequence trading, return to open, gap strategy, momentum strategy, swing trading strategies, news, some anti-cyclic strategies, some pyramid strategies. So whatever, you could name the strategies whatever you want. You have 10 strategies, and for example, you have 10 markets. And this is just an example. If you make with each strategy in each market just 0.5% over the whole year, you have 10 markets, 10 strategies, there's 100 possibilities or 100 results. 0.5 means overall you made 50%. Yeah? So this means that's not one strategy which is responsible for the whole result. It's a complete set of strategies. Maybe if you're just doing 2 markets, 2 strategies, it's maybe just 2% depending on the strategies. So for example, this first box, 6%, the green box, 24%, all markets, 50%. Depending how much markets, how much strategies you're playing. That's my real scorecard. So from the live trading room, you see, there are some strategies. For example, breakout open range in the euros dollar, I don't make money. I lost 3.66%. In the DAX, I made some money. But overall, if I put all together, and some strategies I do not apply for some markets, yeah. So overall, I made on an annual base 60%. Yeah, in the whole period 90%, but on an annual base 60%. So this comes not from one strategy. Okay, there are some strategies which are performing very good, like the trend following, yeah, in S&P and DAX, for example, as long as we have trends. But what I want to tell you is you need more than one strategy. You need more than one market. And this sounds a little bit different to what I started my presentation when I told you concentrate on a niche, concentrate on one market. But it's just for the beginning, and then I'm still not trading 2,000 markets. I'm just trading this markets, and you see, I'm not trading all these markets frequently. So some markets like oil, I'm just using for one strategy, and for the other strategies not. But when you start your trading business, and when you ask me what's the best way to learn the trading is to start with one strategy and one market. And don't put yourself under the pressure that you have to earn with that strategy directly 80%. More important is that you're really doing the strategy correctly, because if you could do this correctly, this strategy with one market, you can switch it to the next market, to 2 markets, and then to 3 markets, and so on. If you're able to handle one strategy, maybe you're able to handle 2 strategies. And that's the way I'm teaching the process of trading in my office. So when I have a new employee in my office, I only allow him to trade one strategy with one market. And I don't care what is the result, so if he's making plus or minus, but I'm checking if he's doing this trading process completely right. And if I know that he's doing this process fine, then I know on the long term he will make money, so I allow him to trade this strategy for 2 markets, and then for 3, and then maybe the next strategy. And for example, if you, what is this word if you're trying these balls, balance balls. So if you want to learn this, okay, do you start with 10 balls and say, oh, it's not working, okay, then maybe I try it with 9, and when it's still not working, you're going down to 7, 5, 6? No, you do it the other way. Huh? You start with 2 balls, then 3 balls, 5 balls, and so on. And in the trading, lots of people start with 10 strategies and 10 markets. It's the same as you want to learn this balance game with 10 balls, or even not with 10 balls, you start directly with 10 knives, yeah, because it makes more fun and looks more crazy, yeah. So better is, if you want to become a professional trader, start with one market, one strategy. As long as you're doing this not good, don't take another market. If you're doing fine, then takes the next market, and so like the balls, next ball, next ball. That's the way you should learn the trading. Okay. So, the next myth about trading is that good traders always makes money. Yeah? That's an expectation a lot of beginners had. So they think when you're a good trader, you must make money. I could remember that I did a presentation in Germany, and I was on stage, and it was an interview, and in this interview, I said, okay, you have to understand that you could make 14 losses in a row. So you have to prepare yourself for 14 losses in a row. So 14 times you're losing money, losing money, losing money, losing money. And somebody stand up from the audience and said, okay, if you're a professional trader, you will never losing 40 times in a row. Yeah? But this shows me that he don't understand the concept of trading because it's statistics. And if there is a possibility to lose, if there's a one-time possibility to lose, it could happen 2 times, and it could happen 3 times. Maybe it's not likely, but it could happen. Yeah? So, for example, if you have a dice, and you're rolling the dice, and you win on 1, 2, 3, 4, and 5, and you lose on 6. It's very unlikely that the 6 shows up, but it could happen. This is the possibility for one time. Okay, it's unlikely, but it could happen. So, on the next roll, it could happen that again the 6 shows up. And after that, it could happen again. Sure, sooner or later, some other maybe the 1 show up, 2 show up, but it could happen that several times in a row the 6 shows up. And this is in trading the same. And so you could maybe, even if you're a good trader, lose money in a row. And you have to understand that. So what I'm doing usually is I'm running some simulations on my systems. Here's just one simulation for one system with 1,000 repetitions. Okay? So, for example, this system is the breakout open range system I'm using. And in this breakout open range system, the hit rate is 52%. This means if I'm doing 100 trades, I miss 48 trades, but I will win with 42 trades. So the hit rate is 52%. The average risk I took on the positions is 0.54%. So you see, I'm just working with small risk. I don't need to risk 3% or 5%, which would lead to bigger drawdowns. 0.5%, that's for this strategy the right risk. And this strategy is trading a risk-reward ratio from 1 to 1. So it means either I lose money or I win money, and the same amount. So for example, if I have an open range from 40 points, I will win 40 points or will lose 40 points. So in this picture, here's the result of this simulation. And you could see, even after 1,000 repetitions, there is a possibility that I could end up in a loss. It's not a huge loss, but there is a possibility. The only thing what here went wrong is that, unluckily, under this 1,000 trades, there were too many losers. But usually, if I'm doing 10,000 trades, it's like the coin toss. Yeah? If we do this 5 times, yeah, there will be a winner-loser. If we do the coin toss 10,000 times, it will be 50-50. But if you have only a small number of tries, it will not be 50-50. And that's the same with this breakout open range strategy. 1,000 still could lead to a loss. It's not very likely, but it could happen. Most of the tries and simulated equity is in profit. So you could see, usually I could expect to make money with that strategy. But that's only usually. Yeah? It could happen that I lose money, and you see, even if I make money, see this black line. Yeah? It starts to go up from the beginning, but from here, from trade 350 up to trade 600, 250 trades until we had a new equity high. So, and that's usually in trading, that's usual. And that's what lots of retail traders or not professional traders don't want to accept. They want to win with every single trade. And I know that's really hard, because when I started the trading like all the other guys, I'm thinking I should avoid the losing trade, I only want to win, and I could not imagine that I maybe need 250 trades for a new equity high. But that's how trading works. It's statistics. On the long term, you make money, but it could happen that there's a period where your equity is maybe going just sideways. So, I would show you again the equity here. I don't fear such drawdowns. It looks not good, I know. Yeah, even here are some drawdowns, it's maybe not so deep, but this could happen. And this could happen, maybe I'm doing not a good job. It could happen just for bad luck, or it could happen that the market conditions are not good. What the reason is, I have to figure out with my checkup in the process. Yeah? Sometimes it's the reason of all three. Bad luck, I'm not doing a good job, and the market conditions are as well are not good. But sometimes it's only one thing. But this could happen. On the long run, I will make money. But there are periods, and that's normal in the trading business, where you have a drawdown. And if you see in the internet some equity curves, especially in the social trading platforms, yeah, where the guys don't have any drawdowns, yeah, then it could be a fake, or this guy is doing a strategy called martingale. Martingale means that you double your risk when you're losing. Yeah? So for example, you're buying the first position. So for example, you're buying euro US dollar at 114. You're not able to make a profit, so you're averaging down and buying another lot at 113, so double. and you hope to get out now at 113.5 break even or with a small profit. And if the market is still going down, you're buying another lot at 112, and another lot at 111, and another lot at 110. And usually, sooner or later, the market will go up and you will make a profit. And so your equity curve, which just shows realized profit and loss, is up, going up, up with only any drawdown. The problem of martingale is, sooner or later, the series of losses are too big for your account. And this will happen with all martingale strategies sooner or later. And then you will burn your whole account with one trade, with one strategy. And on the social trading platforms, the strategy is so famous, and people like this because you are paid for followers. Yeah? And the followers are just looking at the equity curve. Yeah? And they see, okay, it's not going down, I will invest with this guy. And you don't care if maybe your $100 account blows up with martingale, because as long as you paid by 5,000 followers, you still make money. So I could not recommend to use social trading platforms as long as you not know what strategy behind this equity curve hides, or what strategy hides behind this equity curve. If it's martingale, I give you the guarantee, sooner or later you will lose all money. So what I have to accept in the trading is some drawdowns. And so it's a myth to say that good traders always make money. No, we have some times where either the market conditions are not good, either my performance is not good, this could happen as well, or I just have bad luck on statistical, in statistical terms. So these are all reasons for drawdowns. On this slide, on this you see here the advantage, the German word Vorteil, so advantage. And that's the time. And I told you already that the advantage has not the same size all the time. Sometimes you have a big advantage, sometimes you have a small advantage. And sometimes you have no advantage. You have not a negative advantage, because that would be already an advantage, because then you have to trade on the other side just. But that's how the advantage maybe is during 1 year. So, and it could happen that here you have a positive advantage, but after spread and commission, this is this area, you still are not able to capitalize the advantage. That's a good reason why you should choose a broker with very low spreads and low commission rates. Because if your commission rates and spreads are high, the possibility to capitalize the advantage is getting smaller and smaller. So it's a good choice with Admiral. For example, DAX 0.8 is really, really low spread. Even in the future, what I'm doing in the future business, I'm paying 1 point spread, so on average. Yeah, 0.8 is really good spread and no commissions. So, and this is just an example, but you could see here in situation A and A, it's not possible to make money because the advantage is too small after spread and commission to make money. Here in situation B, there you could make money, here you could make money, here maybe, and here. And that's the normal trading business. It's not the whole year where you can make money. There are some periods where it's really easy to make money, and some periods where it's a hard time. And it takes, for me, I'm not identifying here, now it's an advantage big. Maybe you need some days until you identify that the advantage is bigger or that you have no advantage. But if you track your trades, if you track the market, if you're analyzing, you could figure out when you have a good advantage and when not. And if there's no advantage, you could not make money. And that means good traders make not always money. They need an advantage. And sure, sometimes just by bad luck in terms of statistics, you can lose some money. Okay. But on the long term, you will make money if you have an advantage. That's my message. Muse number 4. Yeah? There are some, I call this mental muse. Yeah? There are some muse, emotions are bad in trading, or good traders just need self-confidence. Hey, we do some motivation and then we are all good traders, so chaka, yeah, come on. This will not work. If you have self-confidence but no skills, you will not be a better trader. Yeah? So if I like to play football, and if I have self-confidence, yeah, I'm still not able to play Champions League. Yeah? That's the example. And there are a lot of things, maybe I have self-confidence, but I even could not do. And it's a mythos that good traders only need self-confidence. Sure, you need some self-confidence to be good in the trading, but what you need more than self-confidence are skills. Without skills, self-confidence is worthless. And you have to understand that, because a beginner, usually a trading beginner, is full of self-confidence. He believes that he could make it in the trading business. When I started my trading business when I was 20, I was so big from self-confidence. I will make it directly. It took me years, 6 years, because I have to educate myself, until I made it. And my self-confidence during the 6 years goes this way. Yeah? Now it's back, but it took some time. So, and there is, in psychology, it's called the Dunning-Kruger effect. And it says, unskilled and unaware of it, how difficult and recognize one's own incompetence leads to inflated self-assessment. That's the title of their study. And what it's saying, I try to translate this in an easy way. Usually, when I will ask now you, this audience, do you think you are a good driver? So you're driving better than the rest of all the guys driving here in Budapest. Yeah? Who's thinking that? Don't be so shy. Who's thinking that you're a good driver, that you're better driving than the 50%, that you're better than 50% is the average? Really, in Germany, everybody raises his arms. Everybody, really everybody. There's nobody, yeah? So, and then I asked, okay, everybody rose his arms now. But you know, everybody's thinking he's better than the 50%. How does this go together? Do you really believe that just by accident, by luck, all the best drivers of the world are sitting here together in a trading seminar? I doubt, yeah? Or, for example, if you watch a sport game, football, for example, soccer, whatever, yeah? Usually, everybody knows better than the trainer. Oh, he should bring this guy, yeah? They should play this system, whatever, yeah? And it's the same in the trading. Usually, we don't know what we not know, and weak performance correlate with difficulties in recognizing own incompetence. So usually, as a beginner, you are incompetent, but people don't realize that they are, yeah? And the message you have to understand is, even if you feel self-confident, even if you think you could make it, skills produce success, not self-confidence. Self-confidence helps you. That's the truth. That's the portion truthfulness of this muse. It helps you, but the fundament of success are skills, and only skills. Yeah? And in the beginning, you don't know what you not know until you know it. Yeah? So you think, oh no, what's Birger telling? I know it better. Yeah? He's telling shit. I know it better. I'm doing this business 26 years, and I know that some guys are sitting here doing this business for half a year thinking, oh no, I think I have a better idea. Because I know this, when I was a student in trading, when I started, I thought I know it better than all the other traders. Yeah? I said, I'm a smart, clever guy. I will know it better. And that's the Dunning-Kruger effect. It took me some time until I was aware of my incompetence. And only if you are aware of this, you are willing to improve your skills, because then you step in and say, okay, I have to do something. I have to learn more. Yeah? I have to train more. I have to become better. Until you don't know how incompetent you are, you still think, okay, I will make it. Just by luck, whatever. Yeah? So it's very important that you understand this effect. And the mental gap in the trading, if this is the result, and this is the skills, and the bigger your skills are, that the better your results become. And the skills define your potential. So that's what you could reach. And if your result is below your potential, that's what I'm calling the mental gap. Okay? So the mental gap, it's important to close this as well, but first of all, it's easier to improve your skills than try to close your mental gap. So the mental thing is important in trading, but it's not so important like lots of people think, because most of them who think that mental things are important lack skills. Another big mental myth is good traders don't have emotions. I could remember one seminar in Germany. I was in the audience and there was a guy showing a picture of Mr. Spock, Enterprise, yeah, Mr. Spock from Enterprise. And he says, look, this is a perfect trader. No emotions, fully rational, yeah, only good decisions. And that what he was teaching was emotions are bad. And it sounds very logic that emotions maybe stops you to perform well, but on the other side, when I came back from this presentation, I thought maybe he missed the point, because emotions also help you to reach your target. It's very important if you want to achieve something to have the right emotions. If you not have the right emotions, you will achieve nothing. For example, if I'm doing this presentation in a fully different mode and emotion, that this presentation will maybe contain the same words. It will be not the same presentation anymore, okay? If I want to do a good presentation, I need the right emotion. Yeah? I need this to perform well. And that's in the trading the same. You need some emotions. Sure, there as well some disturbing emotions, and the question is how you handle the disturbing emotions, but it's not true that you not need emotions. And here's another study from psychology, Jerks, Dodson, Law, and they examined performance and stress or arousal. And they found out if you have to do a task, and you want to get performance in this task, so without any arousal, so that's what I did when I started here, or when I talked this way in the presentation, with any arousal, you're not performing good. Then, with a little bit arousal, your performance increases and you're getting better, better, better. Until a point where this arousal becomes stress. So if I'm too stressed with this presentation, yeah, I start to mix words and whatever, yeah, then I'm still in emotion, but then I start the stress and everything, the performance comes down. So in the trading, the same. You need some kind of arousal, but it should be not stress, and this is difficult. Because, in trading we get arousal, for example, from position size. Is the position size too small? We don't have the right amount of arousal to perform good. If the position size is too good, too big, then we feel stress and performance comes as well down. It's typical phenomena, or what is seen with traders who start in a demo, doing good in a demo, then they trade with real money and they feel some kind of stress and performance goes down, down, down. Yeah? So it's not so easy to figure out what is the right position size to get the right arousal in you. That's not stressful, but it still attracts you. And the only way to figure out that is that you start with a very small position size, the smallest position size your broker allows, and then you increase, and you watch yourself how you feel. So, do you feel any kind of arousal? Do you feel any stress? How you change if you increase your position? Most beginners do the different way. They start with huge position size because margin allows them. Oh, I opened just an account with 1,000 euros and I'm full in margin so that they get the margin call midday, noon, yeah? Broker already calling them, oh, what you're doing there? So, yeah, and then they reduce position size when they start losing, yeah? Because account getting smaller, smaller, smaller. What you should do is, even if you have a big account, 100,000 euros, 500,000 euros, whatever, start with the smallest lot as possible and then figure out and trigger out your point of peak performance. It's different. It depends from you. I could not say this is the optimum position size. You have to figure out for you. Yeah? So that's one point, why emotions are good. You need to feel something. You need to feel. If the emotions are too high, then your focus is usually too small. So you're not focusing on the broad picture. You miss information. You overvalue information. And some people missing energy to execute, so they are not able to execute their trade maybe in a loss. They're just sitting there watching how they lose. Yeah? And usually people, if the emotions are too high, falling back to bad habits. Yeah? So you have, every trader has some habits. Some habits maybe are bad, and you're falling back to that if your emotions are too high. So, if I'm saying that emotions are good in trading, you have to know how to handle your emotions. What is a good way how to handle emotions? And my philosophy on emotions, my philosophy is that all your emotions are a signal from your subconscious with a positive intention. So, your subconscious is saying something to you, and you have to understand that message. Usually, here in Western and East Europe, we are not used to deal with emotions. We not learned that in school. So we don't learn to understand the messages. And if we don't understand the message of the emotion and the positive intention, we could not react in the right way. And as a trader, you experience so many emotions that it's very important to understand them. So, here are a list from some so-called bad emotions. Fear, for example. What is fear good for? So what is the positive intention of fear? Any idea? Maybe too much risk, and so the positive intention is fear should protect you. Without fear, you could not survive. Yeah? So people with a damage in their brain and they don't feel any more fear, they could not survive with help because they would run over on a highway with 6 lines, yeah? Not looking left and right because they feel no fear. Why should I look left or right? I'm here. Yeah? So, and fear should protect you. So if you feel fear in the trading, the message could be you're not prepared enough. You could trade too big. Yeah? Maybe you're not in the situation to trade, whatever, but it is a message and you should react to that message. Other emotion, frustration. Why feels frustration so bad? Why? What's the positive intention of this worse feeling? What means frustrated? Frustrated means you have a target, you have a goal, but you're not reaching it. You try to reach that goal, but you miss that goal. And the positive message from your subconscious is, change something in the way you want to reach your goal. The way you tried is not working. Change something. And if frustration wouldn't feel worse, you never would look for another solution to change something. Imagine frustration would feel like love and happiness. Oh, I'm so frustrated, I missed my goal in trading. Doesn't matter, I love it. So fine, again, another 1,000 euros. You will never change anything. Yeah? So this feeling must feel uncomfortable because it's a strong signal from your subconscious to change something. And if you feel frustrated, you should welcome this feeling because it's a clear message. Hey guy, that's your target. If you still want to reach your target, change something. You will not reach this target if you're doing all times the same thing. Maybe you have to learn something new. Maybe you have to change the style you're trading. Yeah, maybe you have to choose another mentor, whatever. But do something. Don't do it in the same way. It will not help. That's why you're frustrated. And the big difference to disappointment, and that's why it's very crucial to understand your emotions exactly, is if you're disappointed, you have a target as well. So there's a target and you don't reach the target, so you missed the target. But disappointed means, hey, this target is not worth anymore to reach. You will never reach this target. No matter what you're doing, no matter what you're trying, this target is not realistic. It's impossible. Choose a new target. It's a completely different message if somebody says, choose a new target or choose a new way. So it's very important that you understand your feelings and that you really identify if you are frustrated or disappointed. Most of the people, they think, oh, it feels very similar. Yeah, sure, it feels very similar, but there is a difference. And lots of traders spend hours and hours and hours watching to try to understand the markets. Yeah? They spend 9 hours a day watching the chart and 0 hours, no minute watching themselves. What's my emotion? What's my emotion telling me? What should I do? They're not asking them the right question. And it's so important that you ask yourself the right questions if you want to become better. And to become better means asking you the right questions. And one of the questions would be, what is my emotions? What kind of emotion I have? What is this emotion telling me? And what should I change? Boredom. Boredom is a very dangerous feeling in the trading. Because if you are bored, the message of your brain is, you have so many skills, Birger, and you're not using the skills. And if you're not using the skills, you're doing something wrong. So use your skills. In the trading, if you feel this boredom and don't understand this message, you think, okay, I don't like this feeling, so I will change something. So maybe I try to trade 10 signals on 10 markets with a double position size, and all the boredom gone away. Sure, but it's not a good solution. After that, you feel frustration, yeah? And then you know what frustration means. So, no, boredom, it happens that I feel that in trading, and I remember what is the intention. So, Birger, use your skills. And what I'm doing is, for example, I'm developing such presentations. I'm writing my books, yeah? I'm reading books. I try to get new knowledge from maybe other, not only trading knowledge from psychology, knowledge from politics, whatever. Yeah? But my brains want some input. And it's not a good input to have risky positions, lots of action in the market where no action is. Yeah? It wants some input. It gets the input because that's the message. You're a hungry brain? Okay, I give you something, but I don't give you big positions or so. I give you something other, and the bottom is gone. And it's important that you understand this and identify this feeling. Yeah? So, lots of feelings. All these feelings have some intentions. And dealing with emotions means, if you have your emotions, you have 3 possibilities. You could deal with them, you could deflection, or you could suppress them. So, usually, the only good answer to your emotions is dealing with them. If you suppress or are looking for deflection, because it's a signal from the subconscious, what happens if somebody is talking to you and you're not hearing? So, yeah, for example, yeah, your partner is saying something to you, you're not here. What does your wife or your husband do? Speaking louder, yeah? And maybe louder, yeah? And shouting out, maybe, yeah? And it's the same with emotions. If you have an emotion and you feel this emotion, but you suppress that or deflect, try to do some deflection. So what happens is the signal getting louder and louder. And the problem is with emotion, if you suppress it too long, the signal is so loud, it explodes. And this usually are then really bad emotions, which could disturb your whole trading within one day. And that's a big problem in trading. You can be a perfect trader for 5 years, for 6 years, even for 25 years. On one day, on one single day, you can crash the work for 25 years, yeah, by making a big mistake. If that happens, you're out of the game. Then still you have experience, but you have no money to trade anymore. And you need money for trading business. So it's so important to deal with emotions. One important thing before I stop with that. Yes, emotions are a signal from subconsciousness. But not every time our subconsciousness tells us the truth. Sometimes it's not true what it's telling. Like in life, not all the things you hear are true. And so sometimes you have an emotion, you're frustrated, for example, in a drawdown. So the message is doing something else. But you are in a drawdown just because the market is not moving. So it's naturally that you're in a drawdown. You could not do something else. The best thing is to stay away, to do something else, and come back to the trading when the volatility is back. Yeah? And you have to understand, so if you get this message, like in the other life, if you get a message, check if this message is true. If you think it's true, then react. And that's how you deal. Identify the emotion, analyze it. Is it true what it wants to tell me? Then act and figure out with a test, and this test is very easy, do you still feel this emotion? Then you have to start again, or this emotion is gone. Then you're finished to deal with that emotion, and the next emotion comes in place. And my definition of discipline is a very simple one. My definition of discipline is not you strictly follow your rules. Because, you know, we have all these rules, driving rules for the streets and so. But, you know, there are situations where you're not able. You know all these rules. But there are situations where you're not following these rules. Why? Because you have not the right emotion for the task you're doing. Maybe driving a car. Maybe you're tired, which is also an emotion. Yeah? Maybe you are aroused. Yeah? Maybe you're driving too fast. Whatever, to produce good results means that you have the right emotion for that task you have to do. And different tasks, different emotions. And in the trading means that even you start the trading day analyzing is a different emotion than executing a trade. Executing is a very aggressive thing. Yeah? You have to be in an aggressive mode. Monitoring a trade is not aggressive. Analyzing is more critic, yeah? More the focus is very wide. You should look at every aspect. Yeah? But in the moment you want to execute a trade, your focus is small, for example. It's a different emotion. So the art of trading is the skill to produce the right emotion for the task you're doing, yeah? An appropriate emotion. If you can do that and you have the skills for the trading, you become peak performance trader. So that's some ideas about emotions. So We are almost at the end of the first part of the presentation. Here's one thing. A lot of people think in the trading there is one important thing and the rest is less important. So the myth is the most important thing is, for example, the entry. Others say, no, the most important thing is the strategy. There is no most important. Look at this plane. What is more important, starting or landing? I hope both. Yeah? I'm flying back today, and I hope the pilot is thinking the same like me. All the steps are important. Yeah? So there is not one more important than the rest. So, and that's trading beginners think, okay, the entry is most important. If I manage the entry, I could become a good trader. So they went maybe to a trading school, which is well known for the best entry. So they learned the entry, that's like starting the plane. But they never learned how to communicate in the air and how to land. So after that, they start their real trading, and sooner or later, after the entry, after the start of the plane, they don't know how to communicate, how to manage the trade, how to land, and they broke. And what's their idea? Okay, I have to learn a better entry because it's the most important. No, it will not help. Yeah? A better entry will not help to land or to communicate in the air. So what you do have, before you think that you have to be a specialist, more kinds of analysis or whatever, you have to learn this process in a horizontal way. So if you know all the steps, like the pilot of the plane, preparing the flight, starting, communication in the air, whatever, landing, checkup, whatever. Before you're not able to manage a complete trading process, it doesn't make sense to think vertical. Vertical means, and that's what a lot of people do, they start with one form of analyzing the market. That's good. But then they not succeed in the trading and they think, okay, they still could not manage trade. They still could not plan trades. They have not the right strategy, but they think, okay, I need more levels of analyzing the market. So they switch maybe from a simple Dow theory to Elliott wave theory to Gann theory to Fibonacci to Ichimoku charts, whatever. They found 1,000 ways of analyzing the market, but they have no idea what is the rest of the process. So this is vertical thinking. This is horizontal thinking. And if I train somebody to learn trading, first of all, I train him on this way, horizontal. I train him to learn this process. And then, if you can do this process in easy market conditions, then we're looking for the next step. And that's what you should learn as well. Yeah? So there's not one important thing. So, and the last thing, the last myth of trading is, the proof is in the pudding. The proof of the pudding is in the eating, suck it or see. So people think, okay, I just try it. I just try it with the trading, and I will see if I make it or not. And I don't need any statistics. Why should I need statistics? I will see if it's working or not. And here, I want to tell you another story to understand why it's so important to understand statistics. For example, maybe you have some money and you want to buy a business from that money. So not trading, you want to buy a business. And there are only two opportunities in this story. One is an ice cream business, so you're selling ice cream. And the other is mullet wine. So mullet wine, it's in Germany very famous before Christmas. So this is hot wine you drink outside with some other alcohol maybe. So it's typically you drink that in November, December, maybe in February when the months are cold. So, and your idea is now, okay, I have some money and I want to invest in one business. And you have only money for one business, so selling ice cream or mullet wine. And now, you know, we have 1st of November, and you look to buy this business, and both of the business has the same revenues. So you're not sure which of this business you should buy. So you're looking at the chart, and you see the ice cream business from February was going up. Now a little bit sideways, but not much. The mullet wine is down. So you think, okay, sure thing, easy thing. I'm investing in the ice cream business. November. Okay, it's only a story to make clear what I want to explain. Yeah? So you invest all your money in the ice cream business. But unfortunately, in November, you're not selling much ice cream. And in December, you're selling less. And in January, you're selling only one ice maybe. Nobody wants to buy your ice because it's so cold. Yeah? And you're thinking in a linear way, oh, now it's January, and if this is going forward the next 5 months until June, I'm bankrupt. Yeah? So I will lose all my money because nobody wants to buy ice. And on that day, you meet the seller of this mullet wine business, and he asks you, hey, you wanted to buy it. You still want to buy? And he offers you a switch. Yeah? You gave him your ice cream business in February and bought from him the mullet wine. Okay, because you saw the mullet wine was up. Yeah? There was a peak around Christmas, but it's still good. And you think, nice kind of deal. So you switch. And you know, in June, like a self-fulfilling prophecy, you belly it up, you're bankrupt, you're down, because nobody buys mullet wine in March, April, May, and June. So, and you say, okay, this is a clear story. Nobody would be so stupid selling his ice cream business in February, because you know from your statistics or experience that it's getting warmer after February. The problem is, in the trading business, lots of people are so stupid. They're looking at some strategies, and one strategy point up, and say, okay, I want to invest in that strategy. And then this strategy maybe has a small drawdown, and the only criteria to drop the strategy is when the strategy is in a drawdown. So they switch to the next strategy, which is now up. Yeah? But if you really have some statistics, you would know that's maybe usual for a strategy to have a drawdown of 10%, 8%. It's no need to change. And what lots of traders do is, even things they work fine, they drop on kick it because it's not producing the results in that month they want. Yeah? Because they don't understand the whole system. And so that's why it's so important that you have statistics, that you need to understand your strategies, when they will perform, when not. With ice cream, it's easy to understand when to sell ice cream, when not. In the trading business, maybe you need some more data, but it's important to have this data. Okay, so we are at the end of the first part, and my intention of this first part was to show up some myth of trading, some misconceptions people had, and which leads you in the wrong direction. And I want to clear up this picture a little bit and show you what is my conception about these things and what is the view behind the curtain, backstage trading. And in the next part, after the lunch break, I will talk about the trading process. Yeah? And my philosophy is a good process produces good results automatically. Yeah? So it's in every business. It's not only in the trading business. If you have a good process, it will produce good results. And I explain this process, and I will show you some strategies in the next part after the lunch break. And for now, we stopped for 1 hour lunch break, and so maybe I give the word to you. Yeah.
Okay, so thank you.
Thank you.
First part. The lunch break will probably till like 1:15, so like 1 hour from now. We're gonna have a lunch break. Just two really things that I wanted to mention. The whole floor is ours, so you can actually find food and drinks anywhere in this first floor. And the second thing is, it's clear that not everybody has registered, so we are asking kindly those people who missed the big lines in the morning to come back there and make the registrations. So 1 hour, we will continue with the strategies. Thank you.
Thanks.
Just because you can trade anywhere, anytime, doesn't mean you should. Just because you can trade anywhere, anytime, doesn't mean you should. Sometimes it's better to keep things simple, concentrate, focus. Admiral Markets understand your needs, so you can trade FX, safe in the knowledge that you're getting the best possible service, without special effects. Admiral Markets, because trading foreign exchange is exciting enough.
So, I would like to welcome everybody back on the second part. This is the part where Birger Schäfermeier will talk about the trading process, and he will introduce actually three strategies. Basically, this part will be like 1 hour, 15 minutes, something like that. And then we will have a break at 2:30 till 3 o'clock, and from 3 o'clock we will go until everybody gets tired, especially Birger. So let me give the mic to Birger to continue with trading process.
So, thank you. Wow. So all of you back, so the first part couldn't be too worse, huh? So, looks like you enjoyed that. Me too. So, second part, now it's getting a little bit more practical. I know the trading business, you can talk about so many things, psychology, strategies, analyzing. So we have to focus on a few things today, and for me, very important, what I already mentioned in the first part, is the process. Because my philosophy is, if you have a good process, you will get good results. It's very, very easy. Yeah? And a good process is defined by a process which is so easy to follow that it costs you not much energy. Because all the things in life which cost you much energy, so if you want to do some things and it costs you lots of energy, it's the odds that somebody sticks to this process are small, yeah, because it's exhausting maybe the process, and they think, oh, I don't want to do this anymore. So if you want to lose weight and you do some extreme things, yeah, usually people will stop to do this and say, no, it's too complicated. Then better I stay with 10 kilos more or whatever. So if you find something which you don't need much effort to do, then it's very easy to follow this. And that's what I try to do with my trading process. In fact, you already know this process, and it looks complicated, but it isn't complicated, and it takes not much time. So for example, if I'm doing my analysis, I'm analyzing in the morning 4 up to 6 markets, and I usually don't need more than 15 minutes to do the complete analyzing. Yeah? Sure, I'm a day trader, so the situation will not change from one day to the next day completely. I could use my analyze from the day before, but I'm doing the same things in the same moment, in the same way, and that costs you not much energy. If you every time have to invent a new process and a new idea or so, and then it's hard to do a good analyze in the trading. But I do the same thing. So first of all, I'm looking for the advantage, and when I'm looking for the advantage, I'm just have a very, very simple thing. I'm just looking at highs and lows. So it's a very common thing. In an old theory, it's called Dow theory. So if you have higher highs, higher lows, it's an uptrend, lower lows, lower highs, it's a downtrend. It's really very, very simple. I don't want to make it complicated, because the complicated things usually don't work. So it's not so hard to figure out. If we can maybe open one charting tool. So, for example, maybe we start here with, we choose some extreme. Okay, just one thing. British pound, there is it. So, and so I don't have a mouse here, so it's a little bit more difficult for me. Usually it's very easy to do all the things if you have a mouse, but without computer mouse, it's not so easy like I want. maybe it takes this week. So, very easy thing. So, just by watching, and I don't need this moving average. It's inside the chart, but I don't need this, therefore. It's just because this computer is just a presentation laptop. So on this computer, it's just some demo platforms and demo, even my analyzing tool, my trading diary is not complete on that there because I'm just using this for the presentation. But the only thing what I want to know is, this is in low on the weekly, this is in high on the weekly, this is in low on the weekly, this is in high on the weekly, and new low. So this trend is on weekly down, but this was also on the daily down. So you could see this here on the daily chart. So low, high, low, high, low, high, low, high. So it's telling you a clear speech or a clear signal what this market wants to do. This British pound against US dollar. And it's not down since yesterday, it's down since 2014. And there never was a period where we had on higher time frames, higher highs and higher lows. Yeah? The best, the bullish situation was here before the Brexit, when the market makes high, low, high, but this low was very close to that. That's not good. And here, that was not significant. This was 2 days, or even 1 day, 24 hours higher before the decision, and after that, the market came down. So we have, since August 2014, I never have to change my long-term analysis on that. The market is telling me it wants to go down, it goes down, yeah, and that's what's happening in this market. This doesn't mean that it's falling all day long, yeah, but the odds that it's going down are higher than the odds that it's going up. And on a 60-minute time frame, so on a 60-minute time frame, yeah, you see here, that's the significant move. Now, maybe that's a correction move. We will talk about this correction move a little bit later. But you could see most of the time, highs and lows are falling. And this huge drop here, maybe some of you are trading British pound against US dollar. There was a story that this was a fat finger trade. So somebody pushed a wrong order in the market, 4,000 future contracts in the night session. So that's a market drop. But if that's the truth, so first of all, why not the market is directly recovering still under this price? And second, I'm not wondering, it's not a question why it's coming down, because the trend was down. So what I'm doing is, and that's what I do, for example, if we have British pound, so daily chart is down. So then I'm checking maybe 60-minute chart. And so I'm looking back on 60-minute chart for, usually as a day trader, for 14 days. So, so here, mid of October, you could see here that's not really going down anymore. It's not really going up. Maybe it's slightly up, but most of all, it's not significant, so I would say sideways. And the 15 minutes, short time frame, this looks in the moment high, low, high, low, high, low, high. So this may be going up. So, and it's going straight going up, and the advantage of such situation, because it's a very mixed situation, is okay in the moment, still the bigger trends are down, but we are in neutral. Yeah? So this is for me more or less a situation where I say, okay, the advantage, there is no advantage. So it's not the market which I really like to trade. This would be different. This has been different when in beginning of October, yeah, the 60-minute were down as well. But now in the moment, it's more or less no advantage. If I have no advantage, the aggressive trading, so here's this equity, it's just a demo, so it's usually it tracks your performance automatically. So we put this here neutral, so this means, okay, aggressiveness, very low, maybe no trades. So And I can do this for all markets. So, for example, if we switch to another market, we go to maybe DAX. No, DAX is not here. Maybe we Euro US dollar. We take that. So you could see 2014, and after that the market on the daily time frame is not moving anymore. It's not significant higher lows and lower lows. It's some higher highs, some lower lows, and higher highs. So on a daily base, Euro, US dollar, so it's sideways. On a 60-minute time frame, and that's for me more important as a day trader. Just 1 second. 60-minute time frame. On a 60-minute time frame, since October, we see up, down, up, down, up. So on 60-minute, it's going a little bit up, but if we consider the bigger picture here, this moves. It is up, but it's maybe not straight up. It's more that. On 15 minutes. 15 minutes. This is small highs and lows. They were up, but already the market makes here new lows. It's now below this low. It's not really down. Maybe it starts here to getting down, but it's sideways. So it's slightly long, but not only slightly, and maybe it's close to neutral. Perfect date to doing a seminar. Yeah, I'm not missing much, I think. What I'm doing next in the trading process, so I'm looking for this advantage, and this is not changing all day long. I'm checking market conditions. So highs and lows. Are these highs and lows overlapping or not overlapping, straight or not? We have several market conditions, and I will maybe show you the market conditions here on this slide. For me, there are 9 possibilities of market conditions. The market could go up, choppy, trendy, or with momentum. So the difference between choppy and trendy is that we have overlapping highs and lows. In the choppy market condition, in the trendy market conditions, we don't have. And momentum means we could have overlapping highs and lows, but we have one huge move, one bar, which is bigger than all the others. That's a special case. So usually we have just choppy or trendy market conditions up, same on the downside. And if the market is going sideways, the market could go choppy sideways. Sometimes in a big range, we have some trends within a range, and sometimes we have some momentum within a range. These are all special cases. So usually, most of the time, we have these cases here. So that's what I'm doing with my software and analyzing that. And after that, I have several tools, and I want to introduce these tools. What I'm checking, these are not all my tools, but some very important tools. So I'm checking seasonality, sentiment, volatility, the FedWatch tool, correlations between markets, and liquidity. But I do this all day the same way. So it's not that one day I'm just looking at the seasonality, next day I'm just looking at the FedWatch tool. I'm just watching all these tools every day. And so I could make sure, because I'm checking the environment under this special circumstances every time in the same way, that I realize maybe if something significant will happen or not. So for example, it's a very easy thing. So we can do this maybe here for DAX. I could not explain to you all the tools today. I just want to show you. For example, sentiment. So that's the 1-year sentiment from the EUWAX. Yeah, I'm checking the DAX, and you could see sentiment is slightly positive, but usually sentiment tells you just where the market is, not where it wants to go. But if sentiments have some extremes, like last year, January, Extreme means usually the market is doing the opposite than the sentiment is doing. Yeah? So that's one thing for the sentiment. For the seasonals, I'm checking what should I expect from 30-year statistics within the next few months. Usually in DAX you could expect from October to December that the market is going up, usually. But now, this year a special cycle. We have this election cycle, so it's a different one. And you could see here, so DAX in November is not performing good, yeah, during election years. So, to repeat myself, it is not a must that the market fall, but statistics says it's more likely that a November market comes down, not huge down, but down, then it goes up on DAX, yeah, in election years. That's what the statistic from 1956 to 2008 is saying, okay? And so that's, for example, the seasonality tool, the sentiment tool. I'm checking volatility. I come back later to the volatility, and I check as well because for traders, it's important to know what the central banks in the world are doing, because there is a saying, and this is most of the time true, never fight the Fed. So never trade against the Fed. So if the Fed, for example, wants to raise interest rates, it's not a good idea to bet against that. And so it's very interesting to check what are the likelihoods, that the Fed will change interest rate. And I have a really nice tool here called the Fed Watch tool. And with this tool, you can check the odds that the Fed will change interest rates. The next date is 14th of December. And you see there the probability, current probability, that's the probability from yesterday. That's the Fed fund targets now, and this would be an increase up to interest rate hike. So you could see the probability for interest rate hike is 71.5%. And you have to know that never in history, ever, the Fed raised the interest rate as long as this probability wasn't above 60%. So the whole year I was checking these parameters. And for all dates, for all Fed sessions, we were below 60%. But now it's the first time, the last 2 weeks, it started to going up, up, up. The first time that this Fed Watch tool is telling the Fed, the likelihood that the Fed will move, that they will hike the interest rate in December is 71%. Okay? So, and knowing this is very important for a trader because you have to know if something is priced in the market or if the market starts to price in some moves in, and you have to understand the fundamentals. And usually fundamentals mean if they raise interest rate, that's not good for euro, that's good for US dollar. It's not good for S&P, it's not good for DAX, it's not good for bonds if they do that. And it is, if we check, where's the trading process, just one sec. So if we had here this process, and I had here the tools are only one part of my analysis. It's important to check the advantage, that's highs and lows. Then you check the market conditions. And the tools are only a help to decide maybe to give this market conditions a little bit more value or less value. But so that's what I'm doing when I'm checking the market, in short. Yeah? But I could do this all day very, very fast. One thing I want to show you is liquidity, because liquidity is very important for markets. And here, what you could see on that chart is how liquidity works in markets. That's S&P. And S&P, that's the financial crisis 2008, and the market drops. And here on that point, November 2008, the Fed starts with this program Quantitative Easing 1. And 600 billion in bond buying, this was a 600 billion bond buying program. And you see, after the start of the program, the market moved up until the end of the program. When the program stops, the market drops. So Fed decided here to enter a new program. That the market starts to move higher before is because market was anticipating that Fed will release a new program. So next program starts here, it ends here, the market drops. So you see, this extra liquidity is important to move the market up. If it stops, the market drops. After that, there was some called thing from the Fed called Operation Twist. It's very similar to the QE1 and QE2 program, but it's spending liquidity, and you see the market is going up. When the program stopped, the market drops a little bit, but after that, and that was 2012, the Fed decided for a new program, and this program, maybe you remember, called QE Infinity. So they decided to raise to buying bonds, not to raise, to buying bonds. Sorry, one sec. They decided to buying bonds here in 2012 as long as it's needed. And so you see S&P is moving up. And here, 2015, they stopped the program. And since that, you can see no significant move up anymore. Yeah? And that's important if you trade index markets. You know, they stopped here the program. Here was the first rate hike. Market drops after the rate hike. And now we are just 20 days away, 20 trading days away from the next rate hike. So guess what will happening? Yeah? So the odds are very high that the market goes further down, not up, yeah, because Fed is withdrawing liquidity, and that's not what the market really likes. But it's not a forecast, and you have to understand, I'm just telling you odds, yeah? So, and if I see now, and if I'm checking now highs and lows, 60 minutes, for example, we see low, high, deeper low, high, deeper low. So now, after a long period where the market was just moving sideways, we see now deeper lows and deeper highs on 60 minutes and even on 15 minutes. So the last few days, the market starts to establish a trend. And yeah, that's what I'm doing when I'm start this analyze. So I'm going through all the markets I'm trading. I'm not trading all the markets here, but I'm going through that, define the trends, checking with the tools, and then I decide, okay, is there an advantage or not? And then which strategy I want to choose. And the strategy depends from several things. So now this is the Hungarian version. I try to strategy. Okay, to show you something. Okay, these are all my strategies. Yeah, lots of strategies. I just choose one. Each strategy has some parameters. For example, the breakout open range. I'm only doing breakout open range if my aggressiveness is above this level. So from 25 to 100. Below 25, I don't do breakout open range. I only do breakout open range if the advantage is here in that level, minus 100 up to 33 or plus 33 up to 100. Not in that level, and only if my account is in the green zone. I will show you what that means. Going back to that. So, for example, if we no, maybe we go to some market we already analyzed, but okay, I didn't save that. Here is it. Okay. So maybe I decide here aggressiveness 0. So you see the breakout open range is red, saying me, okay, under these circumstances, with this environment, we have a trend down, but for some reasons I decided not to trade so aggressive. Maybe my tools tell me don't do that because the trading tools said that market conditions are not good. Then I shouldn't do the breakout open range. If I change here, level of aggressiveness, breakout open range is now green, should be green. Now it's green. Yeah? Same if, for example, here, sideways, now breakout open range is red, because I only do this strategy when the market is in this area, as the advantage is here or here, not in this gray area. So this tool helps me when I choose the strategies. Which strategy is right for which situation? It's a very, very easy, process. Just one sec. Okay. So I'm doing my analyzing, then I choose the right strategy. My trade tracer helps me choosing the right strategy, and then I plan the trade. And if I do my trading plan, it's very detailed. So it's not only where to enter, where to exit, what's my target, what kind of trading stops I'm using, what I'm doing before news, when I will pull my limits. So for example, if maybe I have some orders in, when to pull these orders. Do I want to stay overnight or not? There are lots of questions answered in my entry plan. And with my students, I do the following exercise. Usually in my courses, I ask them, make your trading plan and then hand out your trading plan to the guy sitting next to you. And if he understands what he should do, then the trading plan is good. Is there still some questions open? Oh, what should I do? Today are the Fed. Should I cancel everything or stay? Yeah? You have to make up your mind before, because in the moment when the market is moving, everything will be stressful, your focus is so small, and you will not making good decisions. But if you make a good trading plan early in the morning, and I do all the things here early in the morning, then I know what to do right in the morning, and then trading is a very easy job. Then it's easy, because I analyze the market, I figured out the advantage, I choose the right strategy, and I have a detailed plan. And the only thing what I have to do is to follow my plan, and that's the trade management. And so trading cost me not the whole day time. I could do my trading, I analyze from 7 to 8. And then later the day, I just manage my trading plan. So yeah, I pull some limits, I maybe change some limits in the trade management plan. Yeah, I will close end of day my positions or when the market reached my target, but I don't have to make permanently new decisions. And that helps me that my trading is not very stressful. And it helps me to repeat my trading. So when I have success, that I could repeat this success. Because if you maybe wake up in the morning, you don't know what to do, then open your computer, see, oh, DAX is going up, I buy, and you buy. And then you make maybe some $100. So next day, you couldn't repeat that. Yeah, you didn't know why you bought. Yeah, it was just luck that the market went in your direction. And if you could repeat your pattern, there are two things. First of all, you could repeat your success, and even if you don't have success, you could change something. You know, okay, in the past I did it that way, and now if I turn this, maybe this will help to improve. You know where to change things. If you do one day this way, next day that way, you never know what brings you closer to your target or further away. So you need to be very structured in the trading, and that's what I try. You know, on my philosophy, the market is chaos. It's a big chaos over there. And if in your mind is chaos as well, this bit will not go. Yeah? So you have to be very structured, and then you could deal with the chaos in the market. So, and at the end of the day, I do my checkup routine, and one checkup said, did I follow my trading process? Is everything right? Trading journal, I keep my trading journal, and all this stuff I'm doing there. So it's very easy, simple process. Sure, today I could only introduce this process to you in my courses. I teach you that and all the steps and checklists for each step, but today it's just that you have an impression how trading works. What I want to do now is, when we look at the process here, now we will talk about one strategy and one special market condition. The strategy depends on the market condition. So we're looking now for a special market condition, and then we go to a special strategy. And I have three strategies at all for you. 2 volatility-based strategies. This helps you to identify trendy markets. So this is more or less for trend following, and 1 triangle strategy to trade corrections. So here you can trade corrections. This strategy, the triangle strategy, you could use long-term, short-term, intraday, whatever. The ATR and VIX strategy, this is more or less for swing traders, for people who don't have time to follow the market minute by minute or day by day. But even if you have only once a week time to check the markets, these strategies are good. So I tried to mix the strategies so that for all of you, I know lots of you have a job or are busy, you couldn't follow the market the whole day. So I choose one strategy for those, and for the other, maybe who wants to trade corrections, another strategy. So the first strategy is a volatility-based strategy, and I have one important observation with volatility. Yeah? You know the saying, maybe, if there is smoke, there must be fire. Yeah? And the same is with volatility in the markets. So if you see some significant move, and significant move means volatility. Volatility means how much is the market moving? Is this a big move or a small move? If you have big moves, volatility is high. If you have small moves, volatility is low. And imagine a time where all the time you have small moves, and suddenly a big move. There must be something behind that move. And this significance of this big move tells you something is going on in this market, and you should check what it is, and maybe it's an idea what to do. And so I have 2 strategies based on volatility. They are easy to follow and strong performance. So these are the vola strategies, and that's what I want to introduce you. First of all, there are 2 ways to measure volatility. The general one is the so-called average true range, so ATR. If you use MetaTrader 4, you have this indicator on your platform integrated. If you use other charting tools, it is in this charting tool a general tool. And it's measuring the existing volatility. And it's by a very easy way. It measures the average move from each day. Yeah? Including, and that's important, including gaps. So, for example, you have one candle or bar, it doesn't matter, you have a high and you have a low, and that's the span of the bar. And from here to here, that's the average move from that day. So high minus low, and in this case it's 15. On the next days, maybe it's a smaller move, and it doesn't matter what shape this candle has. High minus low, so 15 ticks, 6 ticks, and if you have the ATR, that's the average true range. So that's the true range of that day, the true range of that day. If you want to make an average, it depends how much days you're looking back. Usually what I'm doing is I'm looking back the last 14 trading days. So the ATR 14 trading days back. If we look just 2 trading days back, here we have 15 plus 6, 21 divided by 2 days, 11.5. So the average move of those both days is 11.5. And if you want to look 14 days back, we have to know what the candles before was the average. You don't have to count this by hand. You can use your computer. It's a general indicator in your computer. So that's the average true range. The other possibility to measure the volatility is something it's called the VIX. The VIX is not in your platform, but you can check this on the website of the CBOE, Chicago Board of Trade, CBOT. And this measures the implied volatility. What does it mean? You know, in the stock markets, there are different products, or in the trading markets. So you have stocks, for example, you have CFDs, you have futures, and one product is called options. There are 2 ways. You have call options, betting on higher prices, and put options, betting on lower prices. And the price of an option is very difficult to calculate. And that's the reason why I don't recommend for beginners to trade with options. It's a very complicated instrument. It looks easy, but it's very complicated. CFDs are much easier. So for example, if you have an option, you don't have only to know where the market is going, you must also know the volatility, the interest rate, the time until the market will reach that target. And so an option has time value, volatility value, interest rate value. So there are many parts which build the price for an option. But one part which builds the price for an option is the implied volatility. That's, to say it in an easy word, the price people are willing to pay for that option. So if people think that the volatility will increase, they will pay a higher price for that option. If people think that the volatility comes down, they will pay less for that option, to make it simple. Yeah? So just to make it simple, if people think volatility will rise, they pay higher prices. And this means that the implied volatility goes up. And this could be a sign. And that's the implied volatility is measured by the VIX. I will show you the chart of the VIX from the past years. So this is from 86 up to 2012 or something like that. One chart, the green one is the S&P. The blue one is the price of the VIX. And you see volatility goes up, comes down, goes up. And every time when there is a crisis ahead, crash 87, Gulf War 1 and 2, Asian crisis, Russia crisis, September 11th, 9/11, Lehman crisis, flash crash. Every time the volatility goes up, 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 up. And usually that's the peak when the volatility is up, and on certain levels, like here, you could see that that's the peak of the crisis, yeah, usually. So if everybody is fearful, the show is at the end, yeah. So it's for a trader, you don't want to sell short if the VIX is high, yeah, because you know everybody is already expecting that the market is going further, and if everybody expects that, yeah, you could not make any money more. So for a trader, if you see the VIX on very high levels, so this is maybe above 40, yeah, be careful with short selling, yeah. Usually the market will turn. That's the first rule with the VIX. But there is a better, and that's the system what I'm using with the system. The VIX tells you a lot of time that the market will drop before the market drops. And that's concept. You could see sometimes that even here, 2008, there was this market drops, but you could see here before it starts coming from a very low level, 2007, and going up and going higher, before the market really drops in 2008. And here's the flash crash. The market also went up higher. And that's a very easy system with the VIX, and I want to introduce that. Just one sec. And it is, you have to calculate the VIX. So you have just to know the closing prices of the VIX. Yeah? And then you can use an Excel sheet and calculate. It's a very easy formula with Excel. The second standard derivation from the mean, from the average. Yeah? And if the market is moving more than the second standard derivation from the mean, that's a sell signal. It's a long-term sell signal. And I'm looking here for the chart. I think it's lost in my presentation, but maybe let me double check. It's not this one I'm looking for. Okay, I can tell you if we go to the S&P, we can do this here. So we go to the VIX. Here's the VIX daily. So already in September, 9th of September, we saw this move in the VIX. And that move already shows the sell signal. So that was the first sell signal. Before that, on that day, here in August, on that day, it's for 26th of August, that day, 26th of August, this was another sell signal where the VIX moved more than 2 times of its standard derivation up. And so remember now 26th of August and 9th of September, and now we switch back to the S&P. That's the daily chart. So 26th of September, that was that day. Here was the first sell signal of the VIX, second sell signal of the VIX. Now the market is here. So the market warns you 2 times, yeah, here and here, that it wants to go down with that easy strategy. Yeah? The only thing what you have to know is closing price of VIX, average of the closing prices from the last 20 days, and then you can check with Excel if the market is moving more than 2 standard derivations away from the VIX. Yeah, it's a very easy formula. And this instrument is very good for timing. It does not say that says that the market immediately go down, like here or even here, but it's a sell signal. So if you have the sell signal, you should be warned that maybe some bigger moves are ahead, because first the VIX goes up, then the market comes down, and later on, when the market really accelerates down, the VIX spikes. So the VIX is a good way to figure out sometimes when to sell. If you don't have, or if you don't want to calculate with Excel, and if you don't want to if you don't know what standard derivation is and so, then you could use the average true range, which is much simpler, the system. So what I'm doing is, in the average true range, I have a system where I'm looking for days where we're moving more than the usual average true range. So first of all, you can check with your system what is the average true range. For example, let's go maybe here on that day. In the beginning of September, the average true range was in the S&P 14.55. This means that on average the market is moving about 15 points each day. Yeah, that's the span of the day, normal. If the market is now moving more than 2 times of this 15 points, then there is some, where some smoke is some fire. This is a sign that there's some smoke, maybe something is ahead. So we see here 14 days, and now on that day here, the market dropped, huge drop. On that day, I could remember, this was a Friday, the market dropped from 2160, it's almost 70 down to 13, so a 60-point drop. 60-point drop within one day. The average true range was 15 points, so 4 times of the average true range drop. And this was a sign that maybe this uptrend is broken and that the market now will come down. And if you have this multiple RTR setup, this strategy, it's very easy. You wait for a day where the market moves more than 2 times of the average true range. That's why I'm counting the average true range all day here, average true range in my analyze sheet. Yeah, there. Every day I'm looking here. Okay, in this market maybe 64 pips, whatever. Yeah. So I realize if we have a big average true range move, something like that, then usually a further drop will take place. You have now to keep in mind with this multiple RTR strategy, most of the time, not every time, but most of the time, 90% odds that after this move, we see a distribution time. So where the market tries to come back, but never goes above this day, okay? That's the moving day, the average true range day, the expansion day. Then we have a distribution time, and then this distribution will be followed by further drop, okay? So market comes down further. The strategy is now, if you see something like that, some strong move, down or up, 2 times more than the average true range, then you could follow the signal that you could wait for a retracement within this distribution, and then you sell and go for further movement down, put your stop on that. So, real example, S&P, just one sec. Where is my, where down? It hides away. So this is another, but that's not what I want. His signal. Okay. It's just one sec. Yeah, the blue, I see the blue one, but my mouse, okay. That. So, okay. So here we are. Sorry for that. So, here was a drop. Distribution time, you could sell anywhere in this. This depends a little bit from your market experience. Yeah, if you sell directly, wait for a bigger retracement, but you should sell here. And then you see now the market continues that move. This strategy is not telling you how deep this market will fall. Yeah? It's not necessary that you know that. The only thing what it's saying you that it's more likely after this move that the market will drop, like then it will go up to new highs. Remember, as a trader, we only think in probabilities. We never know for sure what will happen, but we have probabilities. There will be some days where this strategy will not work, like after this Brexit, for example. This Brexit day, was as well an RTR expansion day. But the market dropped only on the next day and then recovered above this candle. So euro stopped out here and then the market moved higher. This could happen, but you know, we're just working with statistics. And statistics means, for example, that's for, I think for DAX. From 2000 to 2015, we had only 69 signals, but the hit rate is 82% that we get, that the market made a further drop or went up after this extension day. So this signal is not so frequently, but if it takes place, the odds are very high that the market will go in that direction. So I will explain in detail what is necessary. First of all, the average true range day, it must be an outside day. What does it mean outside day? What does it mean? You have here, for example, in the euro US dollar, one candle. This candle is outside from the day before. Here you have as well one candle, but this is inside of the day before. And it must be an outside day. So we don't want days within a range where we have this momentum or this average true range expansion. Second, the close must be outside as well. So the market should not recover on the same day. It should be closed lower. And the retracement of the move should be on the same day. So if the market retraces the same day, not more than 50% on the same day. The next day it could retrace more, but maximum retracement 50%. That are the conditions for this setup. And I will show you here this slide. So we have, for example, here the average true range expansion, multiple ATR candle. This part from here to here is outside. This part from here to here is inside in the candle before, but the bigger part of the candle is outside. That's important. Yeah? The bigger part of the candle must be outside. That's the fact here. Okay? Then the maximum retracement from the low to the close is very small on that day, and we never retraced here to that level also. And the retracement on the next day was just here to that level. But that's not so important because the next days are the distribution period, and here somewhere you want to sell, usually. So that's the examples, and now we could check on euro US dollar, maybe. So, can maybe one sec. So maybe I use the other chart because it's so difficult with my mouse, and I don't have. I use a print screen. That's the easiest way. So, for example, euro US dollar. This year, 2016, or last year. So you could see here on that day, the market was moving more than 2 times of the average true range. That's the average true range. More than 2 times. Outside day, no retracement, nice signal. The only problem with this signal was there was no distribution time period, so you have to sell immediately on the next day. That's maybe a problem because if you wait for a retracement, you will never see that. So maybe this signal was good but hard to catch. Then in December last year, we saw from here to here, this was a 600 pips move up, so more than 2 times of the average true range. And the signal here's a distribution period you could buy, and you see that the market is moving further on, up. And again, here you see up move, yeah, outside, most of the time, small retracement, moving up. So this strategy is good for currency markets, for commodities, for index markets. Usually it works very well in most of the markets I'm trading. Yeah? And I don't want to bother you with my statistics, and so it's just that you see the signal. It's not just by feeling also. I had long-term statistics on that to figure out will this signal work or not. And it's really a nice way to identify some trends. You could see this trend, this trend, this trend. So it's a really nice way. The only thing is that you get the signal maybe within one market 2 or 3 times maximum in a year. So you have to be patient. But you remember, we talked about trading mindset, and you have to remember what's your target. If your target is entertainment in the trading business, you could be entertained all day long by the market, and it costs you lots of money, lots of commission, lots of spreads. If your target is to become a good trader and make money, then maybe it makes sense to wait until you get the signal, then you do your trading and make money. Yeah? But it depends that what you want. And most of the people get that in life what they want. Yeah? But sometimes they don't know what they want with their conscious, but unconsciously they want some entertainment, exercisement, whatever. Yeah? Then you get this in the market. But if you want to make some money, then wait for the signals. You see in 2015, 3 signals or so. It's not much, but it's usual for that strategy. Same with the average to range, with the VIX strategy. Usually you get not too much signals with that strategy. So these are some long-term signals you could use for trading. And for the swing trading, it makes no sense in day trading, because if you enter here, you don't want to enter here, out here. You want that this move will be continued. At least one time average, one ATR move more. So if the ATR is, for example, 100 pips, another 100 pips. So that's what you want, usually. So in the next part, I want to show you some strategies for triangles. And triangles are consolidation patterns. And it's not easy to trade them. It's much easier to identify them. But even if you identify them, you're not in a hurry. So usually what you should do is you should wait until you clearly could identify the triangle, then you wait for the breakout, and after the breakout you will trade this. 65% of the time the market is moving just sideways in consolidation patterns, especially this year in election years. It's more than 65%. And the problem of triangles is on the basis of their shape and structure, triangles are not easy to trade until they are fully developed. So that please keep in mind. The start of the formation on the triangle is always the widest point. And as the market continues to trade in a sideways pattern, the range of the trading narrows and narrows, and the point of the trading is formed. The point of the triangle is formed. So I will show you what that means. So typically, you have a move down, and then the market goes up. That's the widest point. And then all swings getting smaller, 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 and sooner or later the market breaks out. And when we talk about triangles, it's very important that you understand there are different kinds of triangles, so they have different shapes, symmetric triangles, ascending triangles, descending triangles, expanding triangles, so different shapes. But altogether is, each triangle contains 5 moves. 1 move, second, third, fourth, 5. This move is already the move out of the triangle. So we labeled these moves A, B, C, D, E. It's not necessary to label them, but it's easier if I do a presentation and if we talk about triangles that you know which point I mean in that triangle. So in your trading at home, in front of your screen, you don't have to label them. We have 2 lines. We have this AC line, which connects point A and C, and we have the BD line, which connects the points B and D. It's important to understand this BD line must not connect this point, the start of A. It's not necessary. In this example, it is the case, but it's not necessary. So AC line and BD line. These points are connected, and the AC and BC line converge, and finally they meet, and so this forms a triangle. The E is always the last move before the market breaks the BC line, and that's important. In trading, we never try to trade the breakout of this AC line. Never. Because the correct AC line we know most of the time only afterwards. We concentrate on this BD line. And we only trade the breakout of this BD line. Usually, if you have triangles, so this is a symmetric triangle, yeah, you have the market an uptrend, consolidation pattern, and then the market moves further. Yeah? Usually, the volume and volatility decreases in triangles, so it comes down. And sometimes you have within the triangle a complex wave. Complex wave means that this C wave is divided in several other moves. It's not so. It's not really a problem, but but I want just to mention this. Yeah, sometimes this move, the C wave, could be a little bit longer than the other moves. So wave C tends to be more complex. And if it's complex, then it's lasting longer and contains a deeper retracement. So there are, so this is just to show up the different types. So we have this symmetric. Symmetric means both lines come together and it's symmetric. The contracting means that the lows may be on one level. It could be as well the highs, but here the lows, and the move is contracting. Yeah. Expanding means, and that's the only triangle form which looks not really like a triangle, only in that direction, in the left direction, that this moves not converge, that they diverge from both. So B, D, AC, and the meeting point is here in the past. So, but this is exception. So, how to trade triangles. So that's what I want to teach you now. Usually, you have to keep in mind what is the move before the triangle. It's important. So, before the market builds up this triangle, the market was moving here up. So, I labeled this move A, big A. Yeah? Capital A. So, then the market builds up this triangle, and you see here, that's the AC line. And what a lot of time happens is, that there's a wrong breakout with the E. That's why we never trade the breakout of this AC line. And then, sooner or later, the market breaks out here from the BD line, and usually the target for this second move, at least above this top here, but usually if we measure the difference, or the length of wave A from top to bottom here, and add this to the breakout point, that's usually a good target price. Okay? So, same if the market is moving down, triangle, breakout, and again, the length of move A should define the target for C. You see on this slide here that I labeled these breakouts with false breakout. Why? The typical thing of a triangle is, after the breakout, you could see a significant move up, and you should trade this move, as well as this move down here. But what happens when this move comes to an end, the market comes back to the apex, to the appendix of this triangle, so yeah, to this level here. So you see, market moving up, comes back. Moving down, comes back. So there are two possibilities to trade. First, this breakout in that direction, and then the consolidation back to that level. Both possible, and both are strategies I do. Yeah? So, concentrate on this BD line. AC lines are not reliable. They're not reliable. So, that's the S&P. You see that the move's getting smaller, smaller, typical for triangles. And, you know, the market broke this AC line here. And, you know, my advice is, don't trust AC lines. Trust this BD lines. These are good lines, that not. And what happened is that the small triangle widens to a bigger one, and it developed to a bigger AC line. Okay, A, B, C, D, and now the move maybe. So, the only significant signal from triangle trading you could get from this is when the market breaks the BD line. So in the last few days, so you see the presentation I finished in October, now in November the market is here, it broke this line, but this line is not a signal for me. Maybe I'm short because of this average true range from here, yeah, from the VIX, but this is not a signal from triangle pattern because that's the AC line, and maybe it's turning to a different pattern. But I know for sure if the market is breaking this BD line, maybe whatever, in the next days when the market comes up, that's a significant signal, uptrend, A, B, C, D, E, and the market breaks out. And I know that this E can overshoot this AC line. So for me now this BD line is very important for trading. Yeah? As long as the market is above, I handle this market like any other markets. So the signals, it's trading, it's down, but as long in the moment we go above BD, it's a long. Yeah. So you have two possibilities to trade. First was a breakout. The second is to buy the false breakout. So if the market is moving here to this E level, A, B, C, D, E, false breakout, and then going up. Okay, wave E can fall short. It must not break through that line. It can stop here. It can stop here. But that's one very aggressive way to buy the market. And I only do that if before that triangle, the market is in clear way up. And all my trading tools say that the market maybe will go up. In the moment, my trading tools not saying that the market will go up. So that's the reason why I'm not buying S&P. Here's some example from expanding triangle in DAX in June. A, B, C, D, and you see here this overshooting E with the Brexit. Before the market was up, triangle, and then you could see market is going up, breaking BD line, is going higher, and when now above this point, went here. It's still not reached my targets. My targets were higher, but you know that's a real market, and the others are examples. So I don't know. Now is the market again back here to that level, but it's a typical expanding triangle, what you could see, and that was a possibility for buying the E. I will show you some other triangles. That's the Japanese yen. Some really. It looks like cherry-picked examples, but are really, for teaching purposes, are very good, even for trading, but usually you don't have such good signals. You see here, that's the market moving down in a clear trend. And then it starts the consolidation patterns. So, consolidation pattern means wave A, B, C, D, E. And you have this BD line, and you have this AC line. And typically, here, the E is overshooting AC line. That's normal. This happens all the time. Yeah? So, but it's still good, this triangle. So as long as the market this E wave is not going above the C, it's still good. And you see one opportunity to sell because the market is down. Here was the other opportunity to sell. Then the market pushes down and makes a new consolidation pattern, A, B, C, D, E. In this case, the E wave falls short, so it doesn't manage to touch the AC line. This could happen as well. Usually, if E falls short, it's a stronger signal because it tells you the market could not manage to go up, so maybe the pressure, down pressure, is already too big, and you see here that move down. But what you could learn from all these triangles is, first triangle, breakout, market comes back here to the top of the breakout, here. Second breakout, strong trend down, but now, you remember, Japanese yen is now back on that level. Yeah, so in 2016. So this is some long-term charts, but very good examples to explain you what happened. So, Euro, US dollar. We have this trend down, and in the moment, the market is moving in a typical consolidation pattern. Yeah? A, B, C, D, maybe shortfall E. Then we will see lots of pressure in the next few months, as long as the market is not going above here, this line. So that's in the moment, on the long term, the triangle pattern in Euro US dollars. And you know, I have to check other tools like fundamentals. And fundamentals in the moment says, okay, Draghi still wants to print money. Yellen wants to do on the next Fed session a rate hike. So fundamentally, dollar would be strong, euro would be weak. Fundamentally, the market should come down. These are only odds. It's not a prediction. But from the odds, yeah, market is now pulling back to that line. It's typical as well that if you have a breakout, market comes back to the line and then starts the next drop. So we will see. That's a triangle on the daily US chart. So, and here's some other nice example in the British pound. A few days ago, after this huge drop, we saw this A, B, C, D, E, but the market never managed to break through this BD line. Instead, and that's why I said that a triangle is sometimes very difficult, even if you see that, you don't know if it really breaks through. As long as it's not breaking through, what the market did, in fact, it comes now up, the market is now here, and so it offset the triangle. This could also happen. But it's not a problem for a trader because I told you, watch at this BD line. As long as the market is not going below this BD line, don't do nothing. within a triangle, so here, trading within this triangle, my best advice is to keep your fingers out, because you have to wait until the triangle develops. Here, the volatility comes down, 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 and it's very, very difficult to make profits within a triangle. As soon as this pattern is resolved and finished, and we get this breakout, usually the move is very fast, very big, and it's easy to make money then with that. But as long as the market is not breaking BD line, stay out. Okay? Very simple thing. So, okay. So, I introduced to you in this session three strategies, 2 based on volatility, and 1 for the consolidation. The triangle patterns are consolidation patterns. Most important that you wait until the consolidation is finished and that you only trade the breakout of the BD line. Yeah? Stay out of triangles as long as they develop. The other triangles you could trade on any time frame, even on the 5-minute charts. The other pattern, the ATR and the VIX, some long-term strategies, but they work very good. Here you sell after the market expanded its own range more than 2 times of the average true range. This happens only 2 or 3 times a year, usually. And here you sell when the VIX moves more than 2 times of its standard derivation from its mean. If this happens, that's a sell signal. Both signals are not really good timing signals, so you could not expect that on the next day you're already in profit. Usually, after the signal, there are a few days left to make your decision, to set up your trades, and then a few days later, the market starts to drop. So what you expect usually after the signal is a significant move against the average true range down move or up move, but that's a perfect opportunity to go in, and you have a perfect stop point. The perfect stop point is the price. We'll show you here where the move starts. Never trade without any stops, because even if you have a high probability strategies like this strategy is, yeah, it's not for sure. It's just statistics. And like on a dice, where statistically the 6 should show up, it could happen that the 6 will not show up if you roll the dice 6 times. Yeah? And that's the same. So we will stop for another break. And in the next part, after the break, I will tell you, based on my personal experience, some important thoughts. Where we are? So, just one sec. So, how to improve your trading sustainability. Yeah? Okay, thank you.
Thank you. Wow. I think we heard a lot of things from you in these 2 parts. However, there is something that you guys didn't hear. And that was an interview what we made during the break. So in a few days from now on, we will send it out so you can actually watch it. And in that interview, Birger will talk about his horror story, what he had. You know, it's Halloween, so so basically it's going to be pretty good. Now we're going to have a 30-minute break, and then Birger will continue. But in the third part, we will have a lot of things to do. At the end of the seminar, Birger will actually give the prizes to the 3 winners. It will take like 2 minutes or something like that. And after that, well, actually everybody received an email from us like an hour ago or something like that, half an hour ago. In that email, you will find the promotions, what we will talk about at the end of the seminar. And promotions, like total worth is like more than 10 million forint. So, but it's very limited to people. So we will talk about that after that. So now enjoy your second break.
So you have all registrations there because for the interview?
Yeah.
Just because you can trade anywhere, anytime, doesn't mean you should. Sometimes it's better to keep things simple, concentrate, focus. Admiral Markets understand your needs, so you can trade FX, safe in the knowledge that you're getting the best possible service, without special effects. Admiral Markets, because trading foreign exchange is exciting enough. Just because you can trade anywhere, anytime, doesn't mean you should. Sometimes it's better to keep things simple, concentrate, focus. Admiral markets understand your needs, so you can trade FX, safe in the knowledge that you're getting the best possible service, without special effects. Admiral markets, because trading foreign exchange is exciting enough. Just because you can trade anywhere, anytime, doesn't mean you should. Sometimes it's better to keep things simple, concentrate, focus. Admiral markets understand your needs, so you can trade FX, safe in the knowledge that you're getting the best possible service, without special effects. Admiral markets, because trading foreign exchange is exciting enough. Just because you can trade anywhere, anytime, doesn't mean you should. Sometimes it's better to keep things simple, concentrate, focus. Admiral Markets understand your needs, so you can trade FX, safe in the knowledge that you're getting the best possible service, without special effects. Admiral Markets, because trading foreign exchange is exciting enough.
Kicsit nehéz, amikor 500 ember próbál bejönni. Kösz. Ez jól esett. Frissíti a bőrömet. Okay, we will kick off with the final part, where first of all Birger will talk about how to improve your trading and some important personal thoughts based on his experience. He will give some advice, and after that we will have about 15 to 20 minutes for the question and answers. So if you have any questions, then just feel free to ask. From probably about 4:50, I hope all the winners are here, so they can come closer because we're gonna reward them. And after that, Birger will actually talk about his promotion, what he brought to you guys, and I will a little bit explain more about those promotions, what we sent out in an email to you. Let me tell you that already, we didn't even talk about that, and already 20-some people applied for promotions, so thank you very much. Okay, Birger, please continue.
So yeah, back on stage. So last part for today, how to improve your trading. And these tips are not maybe some quick fixes for some of these advices I want to give you now. You need maybe some time, maybe you have to train them, and maybe you have to do some changes even in your life, but they're all important and necessary if you really want to improve in the trading. And it has nothing to do with the trading system itself, so with strategies and so on. It has more in general to do with how to gain success and how you could get success in the trading business. And I will give you some important thoughts from my trading history, what I learned, what trading learned me and myself. So, and we have here a 7-step plan how to improve, and later on I give you some important thoughts and questions you should ask yourself. First, I want to start with, it sounds very easy to set goals, but most of the people make no difference between a wish and a goal. Yeah? So for example, I really like to wish to play 400 piano. Yeah? I really like to do other things in life, but what I don't like is to train for that. Yeah? So this one is a wish. I like that, I want this, I want that. And a goal is really something you really want to train for that, and each goal has a price, and that's the second point. You know, and you have to know the price for your goal, and you have to commit yourself to pay this price. And even if you set goals, it's not so easy to find the right goals, the goals which fit to you. And it makes no sense if you set yourself targets or goals and they don't fit to your personality. In the break, somebody came up to me and asked me, after 26 years, why am I still loving this business? And I said, okay, I'm a guy who loves to set myself goals and then go for this goal. And I know that it's a privilege because most of the average guy is not able to set his own goals. Maybe the boss said, okay, this month you have to sell this contract to 20 people or whatever. Next month you have to do that, and you get some external goals. And it's not really motivating to go for some goals somebody picks for you. So you should pick up goals which motivate you, and I enjoy this in the training, that all the goals and all the targets I set for myself, I'm 100% responsible myself for that, but I could choose them myself. And so this great freedom trading offers me, that what still keeps the passion alive in me when I do this trading business, because I can set up goals. I can set up trading goals. I want to improve my trading process. I can set up goals. I want to earn more money. I can set up goals. I want to get better students. I want to teach the students better. I want to have more successful traders in my company. These are all goals, and all these goals are set by myself. And it's important that you only set goals you set yourself. So not your partner, not somebody else. So first rule in goal setting is you pick the goals you want. The problem with goals is sometimes people don't know what they really want. And that could be a big problem. If you don't know what you want, how big is the chance that you get that? Yeah? If you start a journey and you don't know the destination, what are the odds that you reach the point? So, okay, I start a journey today in the evening. I know my destination is Düsseldorf, but if I don't know it, I don't know what to tell the taxi driver. Drive somewhere. Yeah, which plane I should take. All it's depending from the goal. And if I'm not doing the right steps, I never reach the goal. But to reach the goal, I must exactly know what I want. What is my goal? And on my seminars, I start with a simple exercise usually. I ask the audience to put a blank sheet of paper in front and write down within 30 seconds if they now get 1 million euros to what they want to spend this for. The only rule is they're not allowed to invest, so not I invest in real estate or that. It's only consumption, yeah. So it's only for themselves, yeah. So that's it's not investing. So write down 30 seconds. So and most of them sit there, okay, thinking. I say, okay, 5 seconds are done. 25 seconds left, and imagine you get the situation, you get 1 million, and you don't know how to spend. And after all, sooner or later, they write down some things, but they really see that it's hard to spend within 25 seconds if they don't invest this money just to spend this. And this shows me, usually, they don't know what they want. And even if they write down, okay, I want a car, this wish usually is not very specific. Okay, which kind of car you want? And then, first of all, when they wrote down that, they don't know what to write down. Second, they don't know why they want it. So what would they do with it? Would they buy a house? Yeah, sports car? Is it the same if they buy a house or a sports car? And exactly what kind of house? Yeah, and why they want to buy a house? Yeah, so why they are concerned about paying a rent. So maybe they won't never pay a rent, so they're concerned never paying a rent. Do you feel more secure if you buy a house that has been paid off? Yeah, those are all important questions. And if they want to buy something for themselves, like a sports car, I ask them what sports car precisely, and why it's a sports car and not an antique car. And maybe they want a sports car because driving fast is fun, yeah? Or because a car provides them with a young and successful image. But what you sooner or later will realize, all the things you wrote down on your list, is that not what you want. What you want is the feelings behind that list. So if you want a house, if you don't want to pay rent, the feeling is maybe security. If you want a car, if you want the prestige of the car, yeah, the feeling is maybe acknowledgement or whatever, yeah. So there are some feelings behind that. Yeah, maybe you want just fun in your life. Okay, and in the earlier session, I told you everybody gets that what you want in life, especially in the trading. So if you want some action, You will get this in the trading business, but you will not get the money. So it's not, okay, I want the sports car. Maybe you don't get the sports car, but you want the sports car because you want to have some really excitement in your life and you want some fun in your life. And now you're in the trading business and you get this fun and excitement directly. Okay, you will lose all your money and you couldn't buy the sports car. And later on, maybe you feel depressed. But the thing is, you have to understand what you really want. And what you really want are not things. That are some emotions. Yeah? And you have to understand why you want these emotions. And if you understand what kinds of emotion you want, and this depends from your values, yeah, what you want, then you can make up this plan and a concept how trading could help you to get that, or maybe what the problem in the trading business is. Because, for example, if you want security, so if you want some kind of secure, you maybe get problems when you start with the trading business, because trading business means you put yourself on risk every day. So you start the trading business to buy a house that you never have to pay a rent because you want to secure, yeah? But every day you put yourself into risk. You see the conflict which arises in you. And this conflict maybe could stop you to become a good trader. And so the first step is to find out what you really want. Yeah? So no goods. Instead you want some emotions, values, security, recognition, fun, independence. Or, like me, for example, when I started with that business, what I wanted was freedom. Yeah? And these values, these goals, your real goals, this determine your actions. Yeah? Nobody wants a sports car to get from A to B. Nobody. Yeah? In fact, behind this wish is a yearning for a feeling. Yeah? So, keep in mind the goal is to achieve an experience of a feeling. Yeah? And behind every goal, there is a purpose. And you have to know this, to identify it. And it's not easy to identify this directly. It means that you have to reflect yourself, to really hear in yourself to figure out what you want. And only if you know exactly what you want, then you could reach it, and you have then to set up ways and plans how trading could help you to get that. But trading is just the process who brings you to the goal. It's not the goal itself. If it's the goal itself, you will not make money, because then you want some fun, action, whatever. So, first lection is in setting goals. And it sounds so easy. Maybe you heard this already, but it is a difficult job. And I could only give you the tip to spend hours to do a good job here. If you set goals, you should follow this principle, SMART goals. The goals should be specific, measurable, attractive, realistic, and timed. So even if you set up a goal like, I want 1 million next year from my trading business. For example, if you have just an account with 10,000, that's not a realistic goal. Yeah? So you have to ask yourself, if you set a goal, is this realistic target? Maybe 1 million is realistic, but not next year, maybe in 20 years. Most people underestimate what they could reach in 5 or 10 years and overestimate what they could reach in 1 year. When I started the trading business, I thought myself, okay, 1 year I want to double my account. Yeah? This was maybe too ambitious. So, but if you take yourself time and have 5 years, and this means times, so when you will reach it, or maybe you have some interim goals, so a good timed goal, which is realistic, the odds that you receive that are much higher. You have to know why. We talked about that. So why you want that goal, what is the feeling behind, and you have all the way to know how to measure your goal, so that you know how far away you are to your target and when you reached your target. So, for example, some unspecific goal, I want to make quite a bit money, a lot of money in the trading. is not measurable. Yeah. So because what kind of money, euros, forints, how much, that's measurable, but not a lot of. A lot of is not measurable. A goal must be attractive. So this target, why is this attractive for you? And that's most forgotten by a lot of people, for your environment. You have to understand, if you change your life, if you are more successful than in the past, maybe if you have more money, it's not always accepted by your environment. Your friends, your neighbors. Imagine you will leave the room here with 1 million. Yeah? And up to tomorrow, you start to be successful. You are successful all the day with the same environment you have now. Is everybody happy with that? Will be everybody happy? It could be, but it must not be. And sometimes this causes problems. So check your environment, check if it's good for you and your environment. If not, make a concept how it could be good for all. Because we are human beings and we are social beings, and if we have problems with our environment, we maybe do some kind of self-sabotage. Maybe it's a good idea to change environment, maybe it's to have a good concept how you deal with your environment, but change this. So, when you start to set up goals, usually you start with a wish. And this wish must be personal. So sometimes people write down when I ask, okay, write down your what? I want to become a master trader. So, master trader. Oh, nice goal. What is personal with master trader? Yeah? That's too common. It's not a personal wish. You will not burn with passion for your goal. Yeah? If you have a wish, it must fit to your belief system. So what you believe is good, what is belief is bad. Everybody has a belief system. Yeah? So ask yourself what values you strive for in your life. Yeah? Trading will determine a large part of your life. And it's only when your value concept is reflected in your vocation as a trader that you will achieve a state in which you will be able to achieve top performance in long term. So you start with a wish, belief, and it's very important to write it down. If you don't write it down, if this goal, if this wish is not worth the time to write this down, you're not committed to it. There's a study from people who write down their goals and people who just have no goals or don't write it down. And the study says people who know what they want, who write it down, are more successful than people who don't write it down. And that's important because in the moment, if you want to write something down, you commit yourself. Like a contract. You make a contract with yourself and you structure your mind to that. So it's important to make a business plan and a trading plan where you write down all your goals. And you couldn't imagine how many traders don't have a business plan. They said, no, I don't have time to write down my goals. So then they're not willing to pay the price they have to do for the trading because, sure, it takes some time, but it's worth to do. Then you have to know where you are, because if you don't know where you are, you don't know which direction you should go. And to determine your status quo means that you have to be very realistic to yourself. So what is your financial status? What is your knowledge? So you only know, you never could use a navigation system without knowing where you are. The best navigation system will not work, even if you have a destination where you want to go, when you not know where you are. When you realize, okay, I'm here, I just have 5,000 euros, yeah, but I want to become a good trader, then you know what kind of resources maybe you need, and you can make decisions, and you could time your decisions. Yeah? And when you reach your goal, this time must not be exactly. You know, if a plane sometimes is earlier, sometimes is later. But on the average, they are in time. And if you know the status quo, your status quo, you know your obstacles. And that's very important to know and to be honest to yourself, what are your obstacles? When I started my business, my trading, my obstacles were I had almost no money, only a small account. I'm impatient, so I'm really impatient person. That's an obstacle. And the only resource I had was time, because at that time I was a student, and so I could dedicate a lot of time from the day for building up knowledge, so building up some resources, building up my account, because I had not enough money on that account. I worked as a DJ. Yeah, I organized some parties just to get more money to my account. And resources are important. If you start a business with not the right resources, you will not succeed in that business. Every business needs resources. And it's okay if you have not all the resources, but it's not okay to ignore that. If you see I have not the knowledge, go for that knowledge. If you don't have enough money, try to get some money somewhere. Wait maybe before you start with real-time trading. Trading, you need time, you need money, you need skills and experience. That are the main resources in the trading. If you lack one of these resources, you could not get successful. But you can build up concepts in your business plan, how to get more money to your trading account, or get better skills, or dedicated more time for the trading. And sure, you have some obstacles, but you have other things which support you. Figure out as well which things in life maybe support you. So I'm impatient, but I can think very quick, and I'm very structured in the way I'm doing things. And that helps me. So, if you know all the things, do a plan with the appropriate measures. So step by step by step, how you could reach your goal. Usually, you don't need to reach your goal with one step. You can do several steps to your goal, so to reach that. And it's a good help to visualize every day, every morning, your goal, that you could see how it would feel, how you would be if you reach your goal. And the last thing is, usually you don't reach your goal on the straight way. Sometimes you turn a little bit away from the way and you come back to the way. Your plan will make this sure, but be committed. So be committed is my best advice I could give you. Most of the people are not committed, and that's why you need a goal which really ignites some fire in you. Because all goals which don't ignite some fire in you, you're not committed to. Then you have to understand that all your goals have a price. Bunker Hunt, a Texan oil millionaire, once was asked, how can you attain success? And there was a simple answer from him. First, you decide what you want, so goal. And second, you decide you're willing to pay the price to make it happen. Then you pay the price. Success is that simple. So you have a goal, and each goal has a price. And you have to know this price, and you have to will to pay this price. And a lot of people are not willing to pay this price. So to become a good trader, to earn money with trading, the price is not only, okay, I open an account, I read one book. You have to train, you have to build up your knowledge, you have to dedicate time. So maybe if you just think, I just want to do some trades without much work, the price to become a good trader is too high for you. It's okay. Maybe you don't want to become a good trader. Maybe you want to do some other things in life. But you have to become clear that all things and all goals have a price. And only if you are willing to pay the price, you could achieve the goal. So ask yourself, do you know the price? And are you willing to pay? Yeah? So, the next thing is, so if you have a goal and you know the price and you're committed to that goal and you want to pay the price, is to concentrate on your plan and on the process, how to reach that goal. And it's very important that you only concentrate on that things what you can control. And that's in trading difficult. Yeah? So, for example, everyone basically wishes to exert control over his environment. Yeah? Those who are confident that they have control over themselves and of a situation are better able to take their lives in their own hands, and actively create their life. So that's absolutely human and that's normal. So the desire for control is a human social construct. This desire has also an impact in trading, but unluckily, most traders want to take their desire to take control, focus on the wrong things. Yeah? For example, a lot of people want to control the market. I said, okay, if I draw this trend line here, the market could not push through or whatever. Yeah? They think they want to be right. That means they want to control the market. Nobody can control what the market is doing. The market is absolutely chaos. So you couldn't control the market. So next step, what people want to do is they want to control their profits and loss. In a certain way you can do this, but maybe it's not helpful. Yeah? For example, if you want to control your hit rate, so how many times you are right, it's a very easy way in trading. You go in, and if you're just 1 pip in profit, you close. That's some source of control. So, and if you're not in plus, you wait until you're in plus. That's not a good advice, yeah? It's just an example how you can take control in the trading. Yeah? Because you should control losses, sure. You should give yourself the opportunity to make big profits. And if you cut your profits with 1 pip, you never have the opportunity for a big one. So usually in the trading, you could not control your outcome. You could not control the results of a single trade. I can control the results of 100 trades or 200 trades, but not of a single trade. Yeah? Because I could not forecast the outcome of a single transaction. Yeah? So it's absolutely impossible to know if the next transaction will be a winner or a loser. So there are thousands of unimportant matters to which we can direct our attention and in which we can find an instrument that satisfies our need and desire for control. However, in trading, the only meaningful thing with respect to control is 2 things. The process, we can control the process, and ourselves. So that's what we can do. We cannot control the outcome of a single trade. It's impossible. Yeah? So if we have a winner or a loser, we have to accept that. You cannot control the result, but we can control the process. And you already know the trading process. And you can control every single step if you're doing the right thing. You can control yourself so that you're not taking too much risk, yeah? That you behave like your trading rules tell you. That's under your control, but not the outcome of a trade and not the result at the end of the day. So when I started the trading in the 90s, I had one of these great ideas. All beginners have this idea. Sooner or later, they come to me up with that idea. So for example, at that time, I was trading the Bund future. And one tick is the minimum price step. was 10 euros. And my idea was, okay, the market was moving 60 pips up, 60 down. So if I managed to catch 10 pips, 10 by 10, it's 100 euros. It's not much, but if I'm 20 days in a month, when I get all day 10 pips, this is 10 multiplied with 10 multiplied with 20, so it's a 2,000 euros at that time, Deutschmarks, but it doesn't matter, each month. And for a student, that's a great income, great income. So I start the first day, and I made my 10 pips and said, wow, great plan. To be honest, on that day, if I would stick to the trade, I would have made 60 pips, yeah? But I was happy after 10 because I just want to make 10. On the next day, the market moved up, so I went in, the market moved up, 8 pips, so I was already 8 pips and plus, and I want this 10 because I needed the 10. But nobody told the market, hey, Birger needs this 10 pips. So the market turned 2 pips before my limit and comes down to break even. So at that point, I still had the opportunity to sell break even, but I said, okay, no, I'm already in, and maybe the market comes back and I paid the commission and so, and no, I wait. So I wait, and end of day, I had to go out with a loss. I don't remember, maybe, let's say it was a 20 pip loss. So now I was down for the month, 10 pips, and this is the third day. So my plan, my nice plan, wasn't so good as it sounds. And you could imagine there are days where you get much more than 10 pips and days where it's impossible to get this. And nobody can control this. But with this plan to get 10 pips each day, that this plan was absolutely stupid. And I want to control not the process. I don't want to control my trading. I want to control the result. And that's not possible in trading. So keep in mind, you cannot control the result in trading. And if you want to control this result, what you earn, sooner or later you will be frustrated, disappointed, whatever. Yeah. So concentrate only on the things you could control. Process and yourself. So yourself, what you're doing and what you're not doing. So if you know the process, train the process. And here's another important result from psychology, from some studies. To train something what is new for you, you need 400 repetitions to build up new synapses in your brain. So if you say, okay, Birger's trading process is nice, I will try it next week. And you try this next week, and you do this 7 times. And after that, you decided, okay, I don't repeat it anymore. But I know now the process. You know nothing, because you never trained this. And you know, all the things you do in your life depends how the synapses in your brain are combined. Yeah? So what you can do and what you cannot do. And if your brain not know how the right trading process is, and you're not trained to that, you never will process a good process. That's the fact. So 400 repetitions means daily analysis, means each morning you do this. Maybe you do this same process with 4 markets, then you at least need 100 days. Yeah? So at least 100 days. But it's not a week or 2 weeks. So really, this training process takes some time. And that's back to the topic, you have to know the price. If you want to do the trading business, there is a price, and the price is train the process. And training means not, oh, I did it twice right, so now this is fine. You need it 400 times right, then it's fine. Understand that. Okay? Twice is not enough. Even 10th. 400 repetitions to train the process. So we have this part of training. We have the knowledge part. So all the things you know doesn't mean that you can do them. It's just knowledge. So you have to train your knowledge. And perfectly if you have somebody who helps you. So training with a mentor is a perfect way to learn effectively and to improve your performance and skill in a short period of time. So every time you use, for example, a navigation system and get off track, the system immediately point you back to the best route. If you do this trading by try and error or without any mentor, you're lacking this navigation system, which puts you back on track, usually. Yeah? You can do, I did myself, because at that time nobody knows how trading works in Germany. I was trader generation 1 when I started. When I started my trading business, 1990, the only traders in Germany are working for banks. So there were no freelancer or free trader who trade for their own. And I could decide to go to a bank and apply for the trainee program trading. But the risk was that maybe my application is denied and I have to work in credit department. That big was too risk for me. Yeah? I don't want real estate, credit, mortgage, no, yes, no, I don't want that. Yeah? So I decided to do it my own, but this was a hard way of learning. It took me 6 years until I was successful. It's a long, long way. Usually you don't need so long. So if we train people in our school, 1.5 years, so that's the time you need to get all the skills. After that, maybe some experience, but you need some more experience, but it will help you. So my advice is to choose a mentor if you want to learn this. Okay? The next thing is condition yourself for success so that you could reward yourself. And that's very important. Only those who reward themselves directly for good performance will be in a position to repeat this performance. Yeah? We know this stimulus, again, from psychology under the keyword conditioning, that if you do something and if you are rewarded, that it's easier to learn. Yeah? So you can only be successful in long term if you're willing to use the money that you earn in your trading for some personal goals. So it's important to reward yourself continuously so that your brain knows that all the things you do, these things making an effort. So for example, when I started my trading business, one of my hidden goal, at that time, I was not so wise as today, and I don't know that I started this business as well, not only for the reason freedom, but as well for the reason fun. I really want some fun, yeah? And for me, it was a funny thing. So, and if fun is one of your preferred values, yeah, and on top on your list of your values, then after a successful trade, you should do something which brings you fun. And that means you should withdraw a part of your profits from your trading account, and experience an amazing day, yeah, an awesome day where you do something what you really, really enjoy. You know, the first time when I was 20, one of my goals was to become, before I was 30, a millionaire. And for some reasons, I reached this goal very early when I was 22. Not with really good trading, but with lots of luck, okay? So when I was 22, I still was a student, and I had 1 million Deutschmarks during that time on my account. And I made this money with some very risky option tradings. It was really lucky, but okay. So this money was on my account. And one of my preferred values is to have fun. But at that time, I didn't realize that. So I left all the money on that account. And to trade these options was really a tough job, yeah, because it was exhausting. Yeah? I have to follow the markets. I have to calculate the values from all these options. It was really exhausting, and it was no fun. But after I reached that goal, and I never conditioned myself for that what I'm doing, my brain comes with a great idea. Hey, Birger, you want some fun, so now you get some fun. So not by withdrawing some money, spend an amazing day, but doing some fun with that money. So what I did is I made within 3 months 1 million, and I lost it within 1 month because I got the fun I want. Yeah, I put very big positions. Yeah, I phoned the banker. Yeah, as a student with a phone. Hey, here I am. Here's the lucky boy. Yeah, I don't say lucky boy, but here I am. So buy me for 300,000. So this was 10 times his yearly salary. Buy me. Yeah, and I was 22. Yeah, buy me some options from this or that. Okay, and the fun starts. Yeah, this guy did what I asked him for. Yeah, and big position. Market was moving up, moving down. I have lots of fun, but I don't make any money. Yeah, I lost it very fast. And the end of the story was, I had 1 million on my account. I never spent €1 from that, or 1 Deutschmark. Yeah? So I was the same guy, and nobody really realized that, even not myself. So I was living in a student apartment, and with no real heating. Yeah? There was a stove where you have to get the coal out of the cellar. Yeah? So at that time, it was not very comfortable. Yeah? There was no luxus, nothing. Yeah? And I not rewarded myself for that hard period when I made that money, even when I made this money by luck. Yeah? But so the process of conditioning worked not very well. And later on I learned that I made better progress after a good day, after a good month. If I do everything okay, I withdraw some money, just 500, maybe sometimes just 100, and spend a great evening with my girlfriend, yeah, a great day with my friends somewhere, but I start to enjoy the life, and I realize, okay, this money on my trading account is real money, and I can buy those things what I want, and behind these things, you remember, are the emotions I want. And so after I understand this process, that the money has some purpose, and the right purpose is only then when I use this money for, that it helps me to get better, because after that, there was a flow in my trading. Yeah? So I have an exhausting day, but I rewarded myself at the end of the week, at the end of the day, with really some nice events. And this helps this conditioning myself to get better and better and better. Next thing, it's very important, and it's a lesson some people never learned, unfortunately, is to take responsibility. Yeah? And it means 100% responsibility. Yeah? No doubt, you too know people who aren't able to achieve their goals simply because others prevent them from doing so. Yeah? It's not their fault that they don't reach their goal. No, it's my wife, she don't let me. It's because I have to do that. Yeah? They find thousands of reasons why they're not successful, and they couldn't be successful, all of which of these reasons, yeah? And they have for all things excuses. Maybe you know this person, yeah? And you know such a person will never be successful. Therefore you have to decide, do you want to play a role of a victim, or you want to have a proactive life. And that's the difference if you take responsibility. If you take fully responsibility for all the things which happens to you, then you're not the victim. Then you have a proactive life. But if you just shift 10%, or even 1%, what happens to you that was because of this guy or whatever, then you will repeat your mistakes again and again because it's not your responsibility. There's a very interesting statistics from crime. People who are victim of some, what is it? So maybe I can check, what is it? So people who have been victim of an investment fraud, yeah, you think, okay, this will never happen again. If you are a victim of investment fraud, so you gave somebody the money, he should make more money with that, and he disappeared, yeah? Big fraud, and you think, okay, it's not my fault because this guy disappeared. If you think it's not your fault, nothing could be more wrong, because you gave him the money. You don't check his background. You didn't control this guy. So, if you think the broker, the other guy, whatever, is responsible for your errors, then you're not right. Maybe if you just look on the moral side, but if you want to improve yourself, take the responsibility. Say, okay, what was my fault that this situation happens? Because then you will not repeat this mistake again and again. Yeah. So, for example, I had an assistant. I'm working in an office, and I have some assistants who help me with the training, who put some trades for me. And one of my assistants made a bad trade for me. He mixed some orders, and there was an immediate loss of more than 300,000 euros within 5 minutes. Years ago, and my account at that time was much smaller, so he lost almost half of my capital. So, who is responsible? He, because he punched in the wrong trade, or me? I could say he. If I do that, when I choose the next assistant, I will not pay attention if he is a good worker or so, because it's an assistant. And maybe the next one will do the same mistake and will lose maybe all my money. But if I say, okay, he punched in the wrong trade, but it's my responsibility because he was my employee and I chose him and I asked him to do that job and I didn't control him when he did that job, then it's my responsibility. And if I think, okay, how could I make happen that this will never happen again, then I took responsibility to things. And that's what I want from a trader. It could happen, bad things could happen. Life is not always good. You will have huge losses. Maybe some things will not go right. A lot of things will go wrong. But if you don't take responsibility for the things, nothing will change and you will repeat that. So, my advice is no excuses. And there's another exercise. I usually ask people on seminars, first day, we have some mental seminars as well in our program. And first, when they come to the seminar, blank sheet of paper, write down why you aren't successful. And then they start to write down, my account is too small, my broker is too expensive. They have a long list, why are they not successful? And I ask them before they write down this list to leave some space on top. So if they're, after a few minutes, most of the guys have such a list. And the space on top, and they, okay, and now let's fill in the space on the top and write on top my excuses. Yeah? So write my excuses, because all these things are excuses. no money, bad broker, bad execution, bad news, bad software. Hey, come on guys, if you're lacking resources, why execute the plan without making sure that you have not all the resources? If you don't have the skills, why try it with real money until you learned it on the demo account? If you don't have enough money, why start directly trading, earn some money before trading? Yeah? If you have a bad broker, why not choosing a good one? It's your responsibility. And I know this is a very hard way of thinking. But believe me, that's the way I treat myself. And this way helps to improve. And this is the same question I ask myself if I have a student in my classroom and I see that this student makes no progress. I could say, okay, lazy guy, this guy is not doing. But the first question I ask myself, what I can do better to help him to improve? Because I don't want to have excuses. I want to make the things better. And the best thing is to do things better is to ask yourself what you could do better, not the rest. And it's very important in the trading. Yeah? It's in general life important, but in trading it's absolutely important. So, that's excuses, and if you're lacking resources, make sure you get the resources before you execute a plan. Yeah? It's very, very important. People like to blame others for their failure. Yeah? Before they would admit that they are bad traders, they find 1,000 excuses why they're not successful. So maybe when you come home, write down your excuses. Yeah? Why do you not get the results you want? And then, if you have your excuses, then work for a plan how to improve, get better resources. It's a very easy exercise, but this exercise will help you. Okay? This exercise, if you're honest to yourself, this exercise will help you. Write down what you think are your excuses, and then what resources you are lacking, and look for a plan how to get these resources. And sometimes you need some time to find the right solution. When I started my trading, my account was too small, and my idea was to earn more money with trading to have a bigger account. But to be honest, my account was too small. So that was an excuse, because I could stop trading, and that's what I did later on, and find some things where I can make some more money that I have at least a mini trading account. What I did, I organized parties for students. And I was on a university with 1,000 students, and I know what all the students want. They want some parties. So I organized a party. Yeah, so if 500 students comes and they pay some fee for entrance, some money for drinks, at the end of the day, there was 2,000–3,000 more in my pocket to put on my trading account, next party. And so it was still not a big account, but it was a size where I could handle my trades, where I could not only trade one lot or just one strategy, so which helps me to become successful. So, the next important step is free your mind to get balance. To be a balanced person is important in the trading. And usually it takes some time until you get this balance. When I started the trading business, I started on this level, on this level of having. The only thing I want is to become rich in a certain period of time. Best time period would be the next day, so something like that. So I want to become rich immediately. So that's that. Yeah, 20. Yeah, if you're 20, you have some such crazy ideas. So the conscious wish was to get rich, but the subconscious wish behind that was, why I want to get rich? Is the life luckier if you're rich? Maybe it's more comfortable, but maybe it's not luckier. Yeah. So what I want is self-esteem from status. Yeah? I want to buy a nice car, nice house. I want some self-esteem from status. there's nothing bad to want that. But this level of having has one big problem. Because having means on the other side, not having. And you know, in the training, it's not always you have, always get. Sometimes you give, a lot of time you give. All the trades you lose. And this means I couldn't be balanced because when I get money, I feel amazing, fantastic, awesome. But in the moment I lose money, I feel bad, poor, worse, So my emotions went up, down, like a roller coaster. And that's not a form of balance. And you could not perform if your emotions go this way. You need some balance point. So the next step was to move from that level to that. So after a few weeks trading, I realized, okay, getting rich within a few days or even within a few months would be impossible. But now I changed to the level of doing. So I read that book, more books. So I never stopped reading books. So when I'm out with my girlfriend, in the train, I read a book. When I was on the beach, I read a book. So even morning in the bus, reading books about trading, doing that. So I was completely in this doing mode. And why? Consciousness, I'm looking for the challenge. I love challenges. But the subconscious behind that was, I could only feel good if I do something. I couldn't feel good if I'm just there and relax or stay there and doing nothing. And that's typical in European countries, that we, most of the time, especially in Germany, we could not feel good if we do nothing, if we are just there. The problem in trading is, if we could not feel good and balanced, we do something, but sometimes the market doesn't offer the right opportunities to do something. So we do trades where trades are not good or necessary. And so you get not good results. So the last level is to come to that point. That's the being level. And there where you get balance. And the self-esteem comes now from accepting yourself. You're good even if you do nothing. If you don't have a status, if you're not rich, you are a good person. And it's not so easy to come to that level, especially when you're 20. And to be honest, to hold this level, for me, it's still not possible. So sometimes I switch back to that level. Maybe not getting rich because now I have enough money, but getting greedy. So, for example, I make big trade, make lots of money, and because it's a nice feeling, I want to repeat that. And I think, okay, if I do the same trade again, I would make the profit for the year. Then I'm in the status of having. So it's very simple to move back to one of these levels. Or if I'm in a drawdown. So just to accept, okay, I'm in the drawdown and the market conditions are not so good for trading. Sometimes I could not accept that I'm in the drawdown. And when I could not accept, then I start trading. And then I'm here on this challenge level. And I'm honest to you, this happens. It's not a problem as long as I will realize this soon enough. So usually after 1-2 days, I say, hey, Birger, look at yourself. You're now in the challenge modus. You're now in the having modus. So come back to a balanced point. So when I started with the trading, I have no idea how to come back to that point. I even not have an idea on which point I was. Now, while I'm analyzing myself, and I told you, don't watch 9 hours the market, try to watch 8 hours yourself. Then it's easy to figure out in which state of mind you are. And that's a very important idea. And balance means physical balance, mental balance, emotional, social, financial, and spiritual. So it's a big task getting into balance in all these parts of your life. Unfortunately, I saw a lot of traders who come to the trading business because they have financial problems and they want to solve the problem with trading. Yeah? This will not work because you feel financial stress. If you feel financial stress, you're not balanced. If you're not balanced, you will have no peak performance. But you need peak performance. So try to resolve your problems. Try to get to a point of balance. And even you can trade with a small account. But what you never should do is trading with money you do not own, so with credit money, and trading to pay the rent of the end of the month. Sure, I pay my rent at the end of the month, or it's not a rent, but I pay for, I have children, and so at the end of the month, it's not stress anymore with trading, but I have no financial stress. Yeah, you know, even if I'm not earning few months money on the market, I know, okay, stay relaxed. I know the good times will come back. Sooner or later, the market offer me opportunity. So if you want to become a good trader, my idea is first, not directly kick off your job and start with the trading. Do it step by step. First, do it maybe on the weekend with a demo. Then maybe do it part-time. And if you're doing better, then you can move more and more to become a full-time trader. Yeah, but you don't do this directly. So, okay, let me check. Okay, we're perfect in time. The last part are some important thoughts and philosophy based on my personal experience. And these are some tips which helps me a lot in my trading. And one is when I'm in a drawdown. Yeah? So how to handle a trading crisis successfully. Yeah? And even a professional trader like me gets sometimes to a point where we're stuck in a loss-making phase in a drawdown. Yeah? Sure, I have some special techniques how I deal with this drawdown and how to withstand a crisis so that I could recover. But my first rule in each drawdown is to stay in business. Stay in business is one of the golden trading rules. Yeah? So, for example, a trading crisis is dangerous. It's a very dangerous time for traders. Yeah? And it will happen to any trader because nobody ever has developed a system which performed all the time good. Sooner or later, you will have some drawdowns. It's not a problem at all. The difference is when you are in a drawdown, you had different targets. So my target is just to stay in business. And when I started my trading, my target was not to stay in business. When I was in a drawdown, my target was to avoid losses. Yeah? So, what's the difference between avoiding losses and stay in business? Sounds very similar. Yeah? So, if I could manage to avoid losses, I'm out of the drawdown, fine. But this maxim, avoid losses, is an impossible requirement. Yeah? There's no strategy where you can get 100% transactions winner. Yeah? So, you have some losses, and you could not avoid losses. And the consequence of this idea, I want to avoid losses, is that traders overextend themselves. Yeah? So if you say, oh, no more losses, yeah, you start to hope instead of really doing a proper crisis management. Yeah? And hope, however, is a bad advisor, especially in the trading business. Yeah? Those who hope frequently no longer want to let the market decide whether or not the trade will be a winner or loser. They want to decide by themselves. And this means that I decide, okay, this trade will be a winner and I'm out maybe with a small profit, but maybe this trade would have offered me a big profit and you're out too early. So stay in business is a very easy idea because it means that even if I have a drawdown, I know I have to reduce my position size. When I want to stay in business, I have to trade less. And I only have to trade if I feel balanced and good. And as long as I'm not doing that, I stay out of this. And my main goal in the trading is not to make maximum profit. There are many traders who want maximum profit. But most of these traders, you see, maybe 1 year on stage, maybe next year on stage, and the other year you never heard from them or only bad news. Now I'm here and I'm trading for 26 years. Sure, the first accounts I lost completely, but later on I decided, okay, it's not making much money. The point is I want to stay in business, because if I stay in business, I could make lots of money, tons of money. But therefore I have to stay in business. If I'm out, even if I have the best skills, now 26 years experience, even if I have the time for trading, if I'm lack the money because I'm out of business, I'm out. And I could not recover. I could recover from a 30% drawdown. Not a problem. Maybe it will take some time, maybe it will take some energy, but it's still possible. But if I'm out of business, maybe I have to do again parties, but now I'm 47. And the only DJ who is 47 is David Guetta. Huh? So, yeah, but he makes more money than me, I read in a magazine. Yeah? So I think 47 million last year, just with DJ. So, okay, so stay in business is really an advice which should help you. Okay? The next one is, don't ask why, ask how. Usually, if there is some problem, people ask, why is this problem? Yeah? So you want to know why. The problem of a why is that you normally comes to the next why. So maybe you remember the last struggle with your partner. Yeah, so you're struggling. And then, why are you doing that? And you say, I did that because of that. And then, why you do that? Because of that. Yeah, and so on. Each why is followed by a new why. So, and if you look in the direction of the why, you're not looking in the direction of the solution. We think if we know the why, we could solve the problem. And this could happen, but it's a very long way. If you go back, yeah? There are people who go to a therapy back into their childhood to figure out where their problems are, and it takes years until they know what their problems is. But the easier way is to ask, okay, here's a problem, how I can solve this. And I promise you, you don't have to know the why. You just know how. Yeah? The most problems you could solve just by asking how I could do better. Yeah? Not why I'm losing money, how I could do better. Yeah? How I could end this drawdown. Yeah? How I could improve my trading. So these questions bring you further. Yeah? So asking how is the right question, and it's a really major, important question. Yeah? So usually, if something went wrong in my trading, sure, when I have time, on a weekend or so, I ask myself also the question why. I'm not telling you never ask why. But if you're looking for a solution, how is the easy one? Yeah? So how leads your mind directly in the direction of the solution? And one way to improve is to ask yourself the right questions, because many people think they can't cannot control their thoughts. Yeah? They think, okay, today this thought come into my mind, or I did that because that thought come into my mind. And in the moment you're thinking something, maybe at first there's a thought, after that you do something. But if you want to control your thoughts, it's very easy when you ask yourself the right question. Okay? So, because in the moment you ask yourself a question, you focus your mind in one direction. So, for example, what color has a cow? Yeah? What's the color of a cow? Typical cow. So your mind is now on different colors maybe, but I focused you not on pink, yeah, maybe not on green, yeah. You have now some special colors in your mind. And asking you the right questions helps you to focus your brain and your mind in the right direction. And asking how is one question which shifts your brain in the direction of the solution and not in the direction of the problem. Why? Shifts your brain in the direction of the problem. Another thing is, so when I ask myself, when I get in trouble, the first question is, what is my target? So it's easier to ask, to bring up your target, to bring up your mind in the direction of the target, than maybe if you ask, oh, I'm in trouble, what could go wrong else? Because then you're focusing on all the things, what could go wrong else, and this will not help you to come back on track. So first thing I ask, what was my target? This helps me, this question, to direct my mind in the direction of the solution and to come back on track. So just by asking myself the right questions, yeah, I come back on track. So, and the last point is, and this is a very important point, and I know that's the hardest point in trading, is to find some acceptance. So, it's very hard to accept losses. I know. And it's very hard to accept your results, accept what the market is doing. And maybe it's really hard to accept yourself. But acceptance is the key. Yeah? If you can accept, yeah, you get more and more balance. And the moment you don't accept things, you're still in a struggle with things. So, for example, some people say, okay, I know in the trading, losses are part of the game. But they could not really accept them, they tolerate them. And there's a difference between acceptance and tolerance. If you tolerate something, your tolerance has a border. In the moment you touch this border, yeah, you get tilt. You know, okay? So maybe you accept the first loss, the second loss, the third, but then you reach the border, you reach the limit. That's the limit of tolerance. And if you're above the limit of tolerance, bam, you get tilt. On getting tilt in poker or getting tilt in trading means that you do crazy things. You ask later yourself, why did I do that shit? Yeah? But then it's too late. You lost already your money. You never should get tilt in the trading or poker. And so tolerance is not a solution. It's maybe a step in the right direction. But accept losses means really that you feel no pain if you make 1 loss, 2 loss, 3 losses. And that really this money you lose, you could afford to lose. And so one mental trick I gave to my students and I experienced myself is, when first start trading, put some dollar notes, euro notes, forint notes, whatever, next to your computer. And when you enter the trade and you know the risk is 1,000 euros, then take this 1,000 euros, drop it to the trash. That's it. Yeah? You lost it. Maybe you burn it. It's done. Could you do? If not, maybe you have still some problems to lose 1,000 euros. Maybe that's too much. So maybe don't try it with 1,000. Maybe you try it with 10. Could you burn this 10? If you're fine with this 10, maybe then you can accept 10 euros. Yeah? So find out what is your limit. And this helps later to accept. So try to accept the things, try to accept what the market is doing, and that's hard for lots of the traders because sometimes you're thinking the market is going down, but the market is doing the other thing. Yeah? It's going up, for example. Yeah? Or sometimes you want to trade, but the market offers you no opportunity, and that means accept that and still feel good and well. This summer, I did not much trades. So most of the summer, I checked my computer. Okay, no market conditions, no advantage, no trades. Yeah, went back at home, yeah, checked in the afternoon. Okay, nothing to do. And it's not easy to accept that the market offers you no opportunity because I love the trading and I love to trade, but when there's no opportunity, it makes no sense. So I have to accept that. And even when you are losing, even if you're winning, maybe you're winning not enough what you want, it's very hard to accept yourself, how you are. So be honest to yourself. To be honest is a very important thing in the trading. If you're not honest to yourself, yeah, you never will change the things which are necessary. And when I started the trading, I wasn't honest to myself, and so I was not willing to change things because I thought, I'm a clever guy and everything should work, but nothing worked. Yeah? And when the point started that I watched myself, analyzed myself, and was honest to myself, okay, I'm missing that skills, I'm missing that, I could do that, then I started to improve myself, and that's what you want. Yeah? You want to improve. And it doesn't matter from which level you come. If you are a beginner, if you have 10 years trading experience, even if you're doing 27 years like me, yeah, I still want to improve, and I could improve because this business never stops. The market is moving, the market is maybe changing, and that's what I like. It's not boring. Yeah, it's a challenge, but in a positive way. So it challenged me, and I really like to improve. And to improve, I have to accept, yeah, that I maybe can improve. Yeah, if you say, okay, no, I can do everything, and the truth is mine. Yeah, then maybe you have a problem sooner or later. So. Yeah, that's some important thoughts about trading. Let me double check. Yeah, we're good in time. So before we come to the questions and answers, let me give you some a short promo maybe. My presentation here is in English, but some of my stuff is already translated here in this book. This is I had 2 books about trading. In German, Kunst des erfolgreichen Tradings and Einfach Trading, so it's art of trading and easy trading. And some chapters are here translated. It's more than 160 pages. And I'm running a live trading room. Sure, this DVD here 2 weeks recorded from the live trading room are not live. Yeah, it's a DVD. But maybe you get an impression. You could show over my shoulders and see what I'm doing, how I'm thinking, and how I'm trading. And I guarantee you, not all the traders are winners there, but you will see how I handle my losing trades, how I handle my winning trades. So what I do, how I do my market analyze. And so today, we can offer you this just for 95 euros instead of 165. So there are 2 ways you can get to this. Click that link or call that number. So that is one thing which is in Hungarian language. And if you're interested, you could get that. And it's not the last time I'm here. I will be here for a longer seminar. We already had some level 2 seminars here in Budapest. And the next will be in December. Usually it's very fast booked out. So if you want to join, you could click that link, or here in front is sitting Ursula. Ursula helps me with business here in Hungary, because unfortunately I'm just speaking English and German. But on the seminars, I'm again translated. So you have a translation, and it's an intensive course from my trading program. We have 4 levels. That's the level 2, and the level 3 is in January. Level 4 comes at the end of the program, but now that's the next 2 levels. So to become a successful trader. And last, the last product I want to show you, if you may be interested in that. Here, that's the software I'm using, and I started to using this just for my asset management company, but now as well for students and all the traders who like. We have this market analyzing tool. We have a risk manager. So this risk manager calculates for each account size and each contract the right position size. And we have a trading diary here. So there's 3 tools in one. And usually, if you buy all these tools separately, the total price of all is 649 euros. I know it's not cheap, but you know, if you want to be professional, you need professional tools. But today, because of Admiral markets, I have a really one-time opportunity. 649 is the normal price, and if you have an account with them or open one, that's the condition, then you can get this, but only 50 clients, because it will ruin me if it's more. Yeah, only 50 clients for a price from 250 euros, so 249 to be exact. Yeah, so you can get this lifetime license from this software, the first 50 clients. And again, if you want this, ask Ursula, ask here. So you could get this, you just get a download link. It will install itself, and it's in Hungarian language, as you saw. Yeah? You could use it also in English and German, but so we have it in 3 different languages in the moment. But here you see, most of them is in Hungarian. Maybe we have other languages in the next month, but that's now we have. So, thank you very much. I'm at the end of my presentation, and I hope you enjoyed this today, yeah? And you had a nice day. Thank you. I was so busy, I couldn't eat anything here, but maybe it's better, so. So whatever happens, I hope you succeed in the trading business. Go step by step, do the right steps. You know now what the right steps are. And yeah, thank you very much. And thank you to Admiral Markets for inviting me. Really, they did a great job to bring so big audience here. And be honest, I'm very popular in German, but this audience is really even big for me. Yeah. Thank you for the translators. I think they had a really tough job to translate my English, but I think they did a good job. Yeah, thank you very much for them. Yeah. So, and thank you to you for coming and joining the seminar. Yeah, I'm really happy that so many people, even here in Hungary, comes to the seminar and wants to hear what I have to say. So. I still have more to say, but the time is short and I have to leave today. We do a question and answer in a few minutes, but before, I think, no?
No, we will actually continue with the question and answers.
Okay, cool.
My only comment on that we have 2 hostesses, and they will have this 2 microphones. So if anybody has questions, please raise your hand so they can actually see you, and they can give you the microphone. It's important because Birger needs to, the guys from the translators, they need to hear the questions so they can actually translate it to Birger. So you don't have to actually, ask it in English if you cannot. Okay? And if we're gonna run out of the time, because it's gonna be very tight schedule from now on, because in like 20 minutes we will give the prizes to the winners. All your questions, you can send it to us, and you will see our contact email. All the questions what you have in your mind in the upcoming days, just send it to us. We try to answer all. If we cannot answer, then we will ask Orshoya, or we will ask Birger, and they will send the questions. So I would like to thank you, Orshoya, also for your contribution to this event. You did a really good job, and I really thank you for today. But let's continue with the questions and don't take more time. So just please raise your hand if you have questions.
So yes, but you need the microphone first, and because but you need it for the recording, because the other will not understand that. So.
Lehet, hogy furcsán hangzik, de az a kérdés, hogy mi az a legnagyobb tőke, amivel kényelmesen lehet még day trade-elni.
Do you have to press something, or I'm not hearing anything?
Igen.
So. Two, yeah. Two is on, but. Yeah, yeah. Comfortably, okay. So, you know, I'm a, I hear myself, so I'm, this is not a good idea, so, microphone in. So, okay, this depends really from the market, but for example, you know, I'm not only trading my money, I have an asset management company, and in the moment we are trading more than 25 million day trading, just day trading, yeah, so it's still very easy, and next year we will start a fund, so, and already the seed money for this fund is another 60 million, so I think, and we already calculated that even the 100 million will be easy in and out. There are some markets like DAX, which are not so liquid, yeah, but for example, Euro stock, Euro US dollar, S&P, they're liquid enough, yeah, so, yeah, bitte. So, other question?
Szerbusz, említetted, hogy kereskedési stratégiát, amikor elkezdted 22 évesen használtál. Azokat a stratégiákat használod még? Amit a legelején?
Okay, when I started the trading, to be honest, I'm using no strategy because I was so unexperienced that I it was more guessing. Later on, I developed strategies and I use strategies, and some of the strategies I'm still using. Other strategies I dropped because market changed, or these strategies, for example, one strategy was of the built to the closing price, and when I started with the trading, the market opens at 10 o'clock and closes at 2 o'clock, so just 4 hours open. So that's the honest reason why I want to become a trader, just 4 hours work, and then you have a day off, yeah? But later, they extended the trading time in the morning starting at 8, in the evening going up to 10, until you don't have this closing period. And so some strategies I'm used just for the closing price, short squeeze strategies, for example, I could not use anymore. So this will, time by time, you have to look in your toolkit, and there are some tools which are not good anymore, and then you have to throw them out and maybe to put some new in. But some of the strategies, especially the trend following strategies, I'm using already for 20 years. Okay. So, other questions? Nobody dares? When I was at the break, and we really need some pause, everybody comes, I have a question, and now nobody dares. I could not believe.
Szerbusztok! Azt szeretném megkérdezni Birger Schäfermeiertől, hogy mi a vélemény a robotos kereskedésekkel kapcsolatban, hogy ő használt ilyet valaha.
Okay. So robots. I'm trading by discretion. This means it's not automatic trading. And sure, there's a lot of electronic trading, automatic trading going on, but I think that the robot trading is only for the very big players, because only they could afford to put millions in hardware, software, and human resources. So usually, if you are a good programmer, it's better to ask for a job at Goldman than trading your small 10,000 euro account, because if you're really good, they give you hundreds of millions to trade with an algorithm. Yeah, so that would be my advice. I don't think that the retail customer could find an algorithm or a robot which is good enough to compete against these big guys. Yeah, what we could do better is we could trade by discretion, and even I'm a small trader in comparison of Goldman Sachs or so in the moment. Maybe not next year. Yeah.
Azt szeretném kérdezni, hogy a pozíciózárásoknál alkalmazható-e, vagy javasol-e mondjuk egy követő stopot, vagy egy előre kijelölt szintnél zárjunk inkább?
Okay, trailing stops. Usually if you read books about trading, it's highly recommended to use trailing stops to let your profit run. But to be honest, I'm only using this under special market conditions. So usually the normal market conditions is that the market is very choppy. So if you use a trailing stop, it's almost impossible that the market reaches your target. So the most time from the market condition, I'm more or less working with some strategy called fill or kill. So market reached the target, or I'm stopped out. So I'm killed. So I'm using trailing stops for long-term trends, for long-term trades, for daily trades only under special market conditions. Yeah? Usually, if the market, especially like it's moving now in the summer, or like in the summer, I'm not using trailing stops. I prefer then profit targets. Okay?
Köszönöm, azt szeretném kérdezni, hogy a kereskedése vagy az elemzése során használ-e indikátorokat, és ha igen, milyeneket? Köszönöm.
Okay, maybe you already realized that I never mentioned any indicator during the whole presentation because I'm not a fan of indicator. For me, indicators, the better name should be a reflector, because they're just reflecting what the market is doing, and they have no predicting value, even if people think that. The only thing I'm using is the average 2 range, but I think it's not really an indicator, something like that. But I'm not using indicators. I prefer to look directly on the prices, because indicators, they are not like the real price, and I prefer look really what the market is doing, and not on an indicator. Yeah? I think the market is telling me more than an indicator. Okay.
Igen, azt szeretném kérdezni, nagyon gyors, rövid kérdések lennének, hogy mennyi volt a legnagyobb nyeresége, illetve a legnagyobb vesztesége. A második az, hogy gondolta már azzal, hogy amit az élete folyamán így elég sok, gondolom, hogy vagyonra tett szert, ebből valamilyen fajta egyéb beruházásra, akár jótékonyságra fordítson, és egy harmadik, hogy mikor diszkózott utoljára.
So first of all, first question was biggest loss. I already mentioned that. So I'm just talking from my personal account. This was a 320,000 euro. This was this mispunch from that guy. This was really the biggest loss I ever had. I had lots of huge profits, but none of these profits in a single trade was so big like this biggest loss, unfortunately. But I have several profits about 200,000, so in that way. And the second thing, so maybe I did not get the question right, but the first, okay, have only my own trading. We have some instruments like managed accounts. Next year we will have a fund. So we have some asset management things, and so I don't know if that the question was, but it sounds like that. Yeah. So okay. Yeah. Yeah. Sorry. So. So, who has the micro?
Jótékonyságra szánta valami.
Okay, so, okay. Okay, okay, question was the same. Yeah, okay, so sure, I donate on a regular basis. And if you ask for other investments, you know, I'm a specialist in day trading, and so that's really what I'm good in. And other investments, I think I'm as bad as all the other guys, maybe if it comes to real estate, if it comes to ships or whatever. Yeah, so I did some other investments, but I think I'm not the right guy you should ask for other investments, yeah, because I'm really trading specialist. So who has the microphone? The question?
A mai high frequency trading az mennyire befolyásolja egy day trader munkáját, és hogyan védekezik, vagy hogyan reagál ezekre a kihívásokra? Mit tanácsol nekünk? Köszönöm.
Okay, first of all, high frequency trading, it's not a problem for me. It spends liquidity. Yeah, and as long as the markets are liquid, I prefer this, yeah, because I'm going for trends, and even if you're high frequency trading, you have some trends in the market. So I like this. I think it's not a problem, yeah. If you read some books about problems, front running, whatever, with high frequency trading, this is a special US issue because they have a different kind of exchange system. So. And different kind of exchange rules. And that's why this high-frequency trading there is maybe different to normal robots trading. Yeah? But for me, in my business, trading DAX, trading US dollar, whatever, it will not affect my trading. Okay?
Hello? Jó napot! Egy olyan kérdésem lenne, hogy a mai piaci viszonyok között van-e még lehetőség arbitrás kereskedésre, és ha igen, ebből lehet-e profitálni?
Okay, arbitrage trading, my point of view is only robots can do this because today it's so fast, this arbitrage. As a normal person, I don't think that there are really opportunities. Yeah, so that's more. There's still some possibilities, but robots do this arbitrage. No? Okay.
Jó napot! Azt szeretném kérdezni, hogy a klasszikus kontraktus alapú kereskedést, hogyha valaki ki szeretné bővíteni opcionális eszközökkel, akkor ezt hogyan kezdje el, és mire figyeljen kifejezetten?
Sorry, I didn't get this. So, what do you mean optional tools to?
So, tehát úgy értem, hogyha valakinek vannak sikeres stratégiái a klasszikus kontraktus alapú irányban való kereskedésben, és opciókat szeretne behozni, mint eszközt ebbe a dologba, akkor mikre figyeljen, és hogy mik a tanulásnak a legfőbb lépései a váltás során.
On my point of view, it's for us, for all of us here, including me. It's not there's no limit if you trade contracts. Yeah, so you can scale up. Yeah, even there's still room to trade more contracts, and so I don't have to look for other products. Yeah, and as long as I don't have to look for other products, I see no sense in that. So, for example. You know, I like to stick to things which are successful, and I don't want to change as long as they are successful. So I'm really trading my contracts. I still know that there's still some space and room to scale more contracts, and so that's why I'm not looking for other options. But that's my point of view. Okay.
Említette, hogy ezek a szimulációs módszerek az analízisben nagyon jelentősek lehetnek a trend meghatározása szempontjából, illetve ugye, tehát a historikus adatok is alá tudják támasztani. Ugyanakkor a váratlan események is. Jól értettem, hogy figyelmen kívül kell hagyni tulajdonképpen azt, hogy van a Brexit, vagy bármilyen elnökválasztás, vagy egyéb, hiszen benne van a trendben, de mégis folytatódott tehát az a trend, ami eredetileg a historikus adatok alapján látható volt.
Yeah. In general, yes, you should disregard all external events as long as it's not game-changing. So some news are game-changing news, but usually most of the news which come out will not change the trend, therefore it's not game-changing. But maybe some news are really game-changing. So Brexit was some game-changing news for British pound. Not for DAX, not for S&P, but for British pound it was game-changing. So that's why the trend, it was always down, already down, but it starts to accelerate even more. And you know, even after the Brexit day, and the market dropped 15 cents, yeah, there still was, now we are 10 cents lower than after this short reaction we saw. Yeah, so there was still some points to make money in this trend. So if you have game-changing news, they could accelerate trends or they could turn trend, but most of the news. So for example, tomorrow there's a release of non-farm payrolls. And these non-farm payrolls are very popular. Yeah, everybody is watching non-farm payrolls. But non-farm payrolls are never game-changing. So if they are higher, lower, this will have a short-term effect on the market, but not an effect on the trend. So they will not change the game. There's a different thing when for example, Mario Draghi will decide, okay, this interest rate policy we do, this zero rate policy, negative rate, now we have so many bad experience with that. He didn't say that, but maybe he will say sooner or later, we will stop that and come back to normal money policy. That would be game-changing. In that moment, you will have some huge long-term and lasting effects on the market. So when I'm watching news, the first thing I decide, is this game-changing or not? And if you have some events which you could not expect, like 11th of September, for example, the World Trade Center, yeah, nobody was expecting this. Something happens in the world. Then I have to decide, okay, does it change the trend? Does it change the situation? If yes, then maybe I have to change my trading. If not, I just stick to that. And that's how I handle news and events. Yeah? And sure, I could not protect myself from such events. So it could happen that I'm long a market and some really bad news come out. Therefore, usually I have a stop. And you know maybe that even if you have a stop, it's not a guarantee that you're stopped out on that price. So I'm usually not have positions which would kill me, even if I'm stopped out much more on another level with much slippage. Yeah, so my average position size is 0.6%. So even if I have a position with 1% and I'm losing 10 times what I plan to lose, maybe I'm losing 10% with one trade. Yeah, but I'm still in business. So that's, if you trade on margin, never look what is the margin for that product. Yeah, that's not the right question you have to ask yourself. You have to ask yourself, okay, this is my entry, this is my stop. What will happen when I'm stopped out? That is my planned risk. And what will happen if I'm stopped out on another level? Will I survive that or not? Yeah? Sure, there will be levels when you're trading with leverage where even I'm wiped out. But this is not a reason to stop the trading, because I know driving car is as well dangerous. There is a possibility that something really worse will happen. Yeah, maybe some tank come from the side over my small car and whoop. Okay, that was it. But the possibility is so, and it's the same like this big events. It could happen, but and despite to this example with the car and the trading, I'm still breathing. Yeah, so that's the good news. Good.
Before we jump to the last question, I just want to ask the three winners to come in the front so we can actually start preparing. So whoever, those three people who won the competition, just please come here next to me. So we have time for one more question.
Just one sec. Okay, if you're asking in English, but for... Yeah, we have a broadcast, so...
Az lenne a kérdésem, hogy technikai elemzésben mennyire bízol a kalapács gyertyában trendváltozás esetén?
In which kind of candle? A hammer, okay. Okay, so when it comes to candle, maybe you saw some candles on my chart, but I'm a big fan from statistics. And so what we did some years ago is we analyzed all this candle pattern and look if there is statistical significance in maybe forecasting the next price. And what we found out in our office was that there is no statistical significance with candles. So candles not really shows you what the market will do. Only exemption if you have this on a daily basis. On a daily time frame, it helps you. There are some patterns, for example, this hammer, which helps you. There is a statistic advantage. But for example, if you look on 5-minute charts, it's too random. Yeah, and so it makes only sense on bigger time frames to use candlesticks and then only few patterns there. That's what we found out with our statistics. So, okay, that was the last question, or?
Yeah, that was the last question.
Okay.
If you have any more questions, just send it to us, to the info at admiralmarkets.hu, and we will answer all the questions in 1 minute. So, it will be a few minutes, and after that we will go to the promotions. We had a competition a few months ago, and there's 3 winners, and number 3 was Horváth István, who receives now from Birger 200,000 forints. So please come up to me and take your prize. Yeah. Congratulations.
Congratulations. So.
Thank you.
Cool.
Okay, so the second place was taken by Lakatos Gergely, who won 300,000 forint.
Cool. Congratulations.
And the winner, and who participated in Weber Katalin education, by the way, It's Szabó Árpád who won 1 million forint. So here are the winners. You guys will get the amount on your account pretty soon, probably, and have fun with it. You can do whatever you want. Cool. Okay. Thank you. Thank you. And well, first of all, let me say goodbye and thank you for all the people who had this, who were watching us on broadcasting. We will cut the broadcasting from now on because it will be only in Hungarian, and but not only in Hungarian. Some parts will be in English, but we will talk about a little bit of the promotions. Already.